We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back everyone to the Capital Mindset Live show. It's been a minute, whether it be through vacations or other things. I have taken a bit of a hiatus from the public community, but here I am. We're back. So I have Andrew with me, and we have the topics that we're going to be going over. Of course, it's not going to be everything that we're going to be going over, as in we're going to go over more things, but they're listed in the description below and somewhat in the title. Okay, ads. Anyways, I have Reuters pulled up here just because, it's the first article I found on this. But if you guys didn't know, Elon Musk Pay Package was approved, $56 billion. And I want to go over, I don't know if we have the same opinion, because actually Andrew and I haven't discussed this, so it's not pre-rehearsed. Do you agree with the pay package or not?
Oh, I fully agree with it.
Okay, never mind. We're in agreement. Okay,
No,
I agree with it too.
I don't know if I don't think we ever talked about it. In fact, this is the first time we're seeing each other. We didn't even have anything like backstage. Basically, I think it's kind of ridiculous to.
I almost dropped my coffee reading that.
I think it's kind of ridiculous to say, "Hey, here's a pay package we all guarantee or all agree on." It's like, imagine like you're a salesperson, your job's in sales, and your company says, "Hey, like hit these goals," and you get like this kind of payout, and you crush the goals, and you get like multiple like billions of dollars of payout. You made the company a lot of money. Like the company made money off of you, and then they're like, "Well, that's just too much money. I'm sorry, no." It seems ridiculous.
We didn't actually think you were going to hit that. The whole point was that you weren't supposed to hit those goals.
Exactly. It was like we didn't think that was really going to happen. Like he went out and did it. What do we do now? I don't. This is actually, I think, one of the things that makes America awesome is the fact that like companies are incentivized and they incentivize people in a way that works for both. And think about it. When this pay package originally was made, what was it? It was like Tesla was tiny.
Yeah, it was.
And so
50 billion market cap.
Right. And so the payout, I don't know how it was structured, if it was, but like basically said, if you get to X amount market cap, you'll get this much money. And he did it. So.
Yeah, it was, I think it was in tiers. And then, the final tier, he passed because no one back then thought that Tesla would be today valued at where it is. No. Even people today struggle with the idea that Tesla's valued, myself included, that Tesla is worth what it is today. So, but we can all cope and see because it is, and that was the agreement, and therefore I think he should be paid.
No, I agree with the pay package. I'd say that the price is at today is closer to a short than a long, much closer. Yeah.
But I think he deserves it, and he can go on, and all the Tesla shareholders can rest assured that Elon Musk is going to have these like dual mandates or dual incentives, because that was always the fear, is that if he didn't do this, he wouldn't focus on the AI, blah, 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 blah. So now I think investors who are ultra bullish because of Elon Musk, and I think Elon Musk is part of the story, whether you like it or not, in this case, it looks like he's going to be still continuing along with the company. So full speed ahead. So I think that when it comes to Tesla, would you say that the enthusiasm has died down a bit, at least on FinTwit for some of the people? I feel like it has.
On the stock or on the car? On
the stock.
Yeah, because it hasn't gone up.
Because it hasn't gone up, yeah.
So yeah, I mean, like I don't know, like there's always the FinTwit diehards. Yeah. For there's some people, their whole identity is Tesla, which is idiotic. What basically happens is as a stock underperforms, the hype dies down. Stock starts to perform, hype goes back up. That's just the cycle.
I think what's fascinating. Well, like the car, I think people are still excited about the car, just not as much as before, but still quite excited relative to other car brands. Yeah, the stock one. There was a guy on Twitter. I don't know if I covered it publicly. I know definitely we covered it in the private streams. But you know who I'm talking about? The guy we predicted would do X, and then he did exactly that. He sold it at the relative bottom. Short
Yes.
went up, and we said what he's going to do is he's going to sell it, buy it again. It's going to go down. He's going to sell it again. Yeah, no, an example of how someone can lose. He didn't actually lose 90%, but if you keep going down that path and you keep doing shenanigans like that individual, you can lose 90% of your portfolio, your investment, without the stock going down 90%.
And that individual, I mean, I don't even think like the buys, the going short, going long, any of that was based on like actual analysis. I think that was all emotional trading.
Yeah, definitely.
And like when that starts, you better just stop. Like if that becomes you, just sit on the sidelines. Don't do anything.
No, 100%. I think anytime you get like in love with the stock, you need to reflect on that. And we're going to be talking about that. That's going to be a topic for today. Your favorite stocks are dead money. There's a lot in there. But a lot of people may not like that.
Everything sans NVIDIA.
Yeah. In fact, actually, that's our next segment. I don't know if you want to jump in on that right now, but
What's that?
All your favorite stocks are dead money.
Okay. What are my favorite stocks?
Well, it's not your favorite.
No, but I'm asking like for the segment.
So the retail favorites, there's I think two. To be fair, there are two that come to mind that are winners that have been winners recently, and I'm talking about when retail got the enthusiasm, because some of these have been winners before, and we'll talk about one of them towards the end because I think it segues real nice into energy, but. Most of these were favorites after the hype buzz, after some sort of massive performance, and then they got really picked up by retail. Of course, you'll find investors that were believers for a very long time, even before, and I'm not talking about that. Okay, I'm not talking about those people. So those people, congratulations, you made good money, blah blah blah. Right. Now, what I tend to see is that everyone knows the long-standing wisdom that if the crowd is in your investment, you may want to look for the exit, because the crowd, as far as like the shoe shiner, when the shoe shiner is talking to you about stocks, be wary about it. This is kind of like the modern day shoe shiner when they're talking about your favorite stock. So there's many that come to mind right now, and again, to be fair, right now there's two off the top come to mind that are doing actually quite well, at least, and let me clarify, from the recent lows. So one of them still hasn't reached all-time highs, but there's Robinhood and there's Palantir. Those ones
have done well. What about Hims?
Hims, I think, was it recent or?
No, I feel like Hims has been followed by.
Was it the whole time?
Yeah. By the way, someone in May, I haven't noticed. It might be you're using the wrong mic, but
I think using the wrong mic. This is the only one. I just have to talk into it like this.
Okay. I think there was a lot of retail that was long Hims for a while.
Wait, hold on. He might be right. Oh, he is. He is, because I killed all my cookies. So now I have to. Okay, so.
Man, you went on a binge last night. You just ate all the cookies.
How about now?
Oh, yeah, that's silky smooth.
Okay, yeah, it was using the webcam mic.
Oh, it was doing what mine does?
Yes.
The funny thing was, like, it didn't really bother me. I mean, it's funny. I guess it's just been a while. I didn't really notice. No, it's not using the audio. It's trash. What were we saying? Oh, no, I think Hims was a retail stock.
Hims was a retail stock. Okay, so then add 3 to that list. Add 3 to that list. And then there's a graveyard of many other stocks that I think are more popular, because Hims is not that popular. Like when it comes to you go on YouTube, it is now. But you go on YouTube and you look up like what kind of stocks most content creators are telling people that they are buying, and they're really excited about. Hims comes up maybe now and again. And I'm looking at the share price here. So let me share this.
Actually, now that I remember it, Hims, when it de-SPACed, it was a big retail stock. It might have died because in 2022 the stock went down a lot. So retail might have gotten out. I don't know.
Retail may have gone up. And to be fair, there's one thing that I think retail may not be paying attention to. We were discussing this last night in the club, right? It's has everything to do with right now there's some sort of not loophole, but allotment that allows them to sell GLP-1s.
Yeah.
And they're really capitalizing on that. And so it's done well. It's not like a company that when I've looked at it was like, wow, this is something I really do want to own. It's an okay / mediocre company in my view. Now Palantir, we've discussed with members that are a bit more familiar with that technology and product. That's more legitimate. It's probably the most legitimate. I think that and Robinhood are two legitimate companies. I actually don't hate Robinhood. So people hate Robinhood. I don't hate Robinhood.
Dude, you and I were talking about buying that. Remember when we were like, you and I were like looking at it kind of in depth? Like it was quite a bit ago.
Yeah, it was October of 2023.
Yeah,
I remember because I was still in. I was in Dallas.
Yeah, because we were looking at it and I was like, like if rates stay higher and they find a way to capitalize and like just use that as a piggy bank to like grow share, like this could do really well. My only thing was like, I generally don't like kind of like the story is we make money off interest income and use it to fund everything. It just feels like rough. But I thought like they could do really well. Obviously, I didn't anticipate like the whole crypto GameStop blow up, which has really contributed to them doing well.
Yeah. Well, to be fair, even if I had invested in it, I would have not made it a material amount because there were other things I was more confident in. That was like what our kind of exploration / foray into some of these previously meme-ish, beaten down fintechs that may not have been that meme-ish.
But I feel like this only came back as a retail stock recently. Like when we were looking, maybe it was already a retail stock at that point. I don't know.
I give him the credit. I give him the credit to give him something because there's plenty of like, as in the graveyard is vast. So, we'll get into some of the more popular names because Robinhood I still think is like it's popular, but not nowhere near as popular as some of these top stocks. And one of them that comes to mind is SoFi.
Wait, what?
So, what is what?
Reborn Coffee is a 7X. What happened?
So low float, low volume. I would ignore. It's like I'm not going to short it, but it's likely more fraud than not.
Well, I mean, it's a 60 million market cap now. So what? It was like a $2 million market cap.
Yeah.
Like I think when this is none of us have an investment in it, but we were looking at it for fun. It's a company, and we're pretty sure that like I think we looked up their headquarters, and it's like. It was like an office, like a tiny little office with a BMW outside.
So give credit to Fuhat. Fuhat found the company. And we all made fun of him for it.
The company is like bad.
Yeah, like I don't even know if I would have been able to be fair. If you had a big portfolio, you cannot really monetize that investment. I don't think you'd be able to put in much money in and much money out because of the low volume, low float. So it's like
let me see what the average trading.
It didn't go up for the right reasons.
Let me see what the average trading volume is in this thing.
By the way, this is like a huge quality of life ad. I don't know if it's necessarily worth for everyone, but this is one of those heated mugs. So I can put this coffee to the side and it will keep the coffee hot. We're sponsored by them, by the way. But it's the next mug. Super worth it in my view. But
we're sponsored by them?
We're totally sponsored by them.
Where's my Griff Bucks?
Well, part of the contract is like, they only give me a mug and that's the payment. It's one mug.
You could at least ask for two.
So follow the non-existent link down below. The next mug, you'll get 0% off, and I get nothing in return for you buying a mug. The mug is 600K. No, it's not. But yeah, so SoFi Technologies. I think this is wow. Look at that. Look at that. Is it that low volume now that you're able to see the?
No, that's after hours. I think after hours just being funky.
No, I'm saying even during the day.
I don't think it's that low. I think it's fairly high volume, isn't it?
It's kind of wonky. Yeah, no, it says 34 is the average. Here.
34
anyway,
what?
34 million
Yeah.
is the average volume. So I'm like, that's it just looks a little off. But anyways, that just could be Google. So SoFi is probably the epitome of a company that's been dead money for quite some time. And the investor base is still to this day probably as fervent. I don't really keep too much track of them, but I was talking to Eric from Investing Sucks and through WhatsApp, because he's Canadian, so we can't text each other because the oppression of borders. No, I'm kidding. But yeah, so SoFi, we get into always these discussions about like the bank itself and what are the opportunities. I'm saying not just with Eric, but with everyone else that we kind of interact with. And I mean, it's such a fascinating just like observation to see all these retail investors kind of cling to this name for dear life. And for whatever reason, they could have picked anything. All these other really exciting businesses, like I couldn't fault them necessarily for Robinhood. Robinhood's a really exciting fintech, really revolutionizing certain things. They were the ones who pushed, for example, free trading. They were the ones who pioneered that. And so as a retail investor, if you're looking for exciting fintech, there's one right there. I'm not saying it's the best investment you could possibly make, but it's seemingly more exciting than the likes of SoFi. Now, a bank, a lot of retail investors also don't understand that, bank investing or bank analysis is probably like one of the hardest types of companies to actually get to understand. And their first foray in investing seems to be like choosing to go into this. And some of these, YouTubers have abysmal track records and refuse to show their percent performance. And they make up any excuse to not show the percent performance because, of course, they would hate to show you that because it's probably abysmal. If you just look at their track record from even the things that they said they were buying, and it's super vague. You don't actually know how much they bought of it. I'll give credit to some of them that they do show that. I won't name names, but some of them do, but some of the more prominent ones do not. And their audience doesn't even demand that of them at this point. And they sell, like, by the way, the reason why I think it's even viable to demand it, it's funny, the one that shows it doesn't even sell a course, and the one that doesn't show it sells a course. So it's like it's a little bit backwards there. But
okay.
What happened?
So I was trying to figure out who you're talking about when I figured it out.
Oh, yeah. I'm trying to refrain from using names, but if the person's watching, you know who you are. I mean, if you're selling a course to make money in the stock market and you're utilizing this as your, example, which is actually hilarious, then at that point, at least show that you've achieved what you're claiming to teach someone that they're going to achieve. If you do that, I still, was like, okay, well, is that person going to achieve said promise? Maybe not, but at the very least, you've achieved it at least once. So I can't say that you haven't achieved it. Right now, I can confidently say you probably haven't achieved it. So, and by the way, let me correct that and say material. Okay, investment, because anyone can have like some random rinky-dink allocation to some random stock. Like, oh, I'm gonna buy 100 stocks, and then like one of them, because I threw a dart at the board, one of them 100x or 10x.
And that's the point of showing allocation, because it shows conviction. Because like certain people are like making all this content on certain stocks, and the stock goes in, like, oh, well, that's not a big investment for me. Like, you just said like it's like. You just, I mean, a little hyperbolic because I don't think they said this. It's like you just said you did a reverse mortgage on your house to buy this stock. And then you're like, well, it's not that big of an allocation. Like, really?
Yeah. So like the call to action, simply put, and this is for anyone watching here. If you watch one of those people, the call to action, what you're owed at that point, based off of again, they're selling you a product, is okay. You don't have to show me the dollar figure. That's fine. Fair game. Privacy, blah, 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 blah. I can respect that. But at the very least, hey, what's your allocation? Show me what is your conviction? You're making all this content on the stock. What's your percent allocation? And at that rate, you can show your percent performance. You don't have to show your dollar performance. I don't need to know if you have $1,000 or 10,000 or 100 or a million or 10 million. There's your percent performance. You can hide all the figures, and then show it over a period of time, and then that gives your audience like a way to engage that. So it's I don't know. But anyways, so SoFi Technologies. I mean, the opportunity here is, I think, solely, and I've said this for a while, it solely lies within their technology stack. That's it.
This is my thing about SoFi. I don't get it. It's a boring stock. It's a boring company. Like the retail investors are into it. They're like, they have all this content they make, but at the end of the day, it's like, oh, it's a bank and they offered other products and they have like technology behind and they offered some. It's boring. Like, it's lending. I don't know. When people talk, it's honestly, this is like Tesla for me. When people like talk Tesla ad nauseum, I just find it boring. And that's how I feel about SoFi. There are interesting companies out there you can talk about. I just don't find this to be one of them.
And we're going to talk about interesting companies. Don't worry, Andrew.
No. I'm not hating, like, because people like to hear about these. They're talked about a lot. But I'm saying as an investor, why you would want to spend time on this. Especially, like, I'll say one thing I find really interesting about this is that, like, some of the SoFi bulls actually watched Investing Sucks video and critiqued it. Mm-hmm. And it was really interesting because it was almost like they were cocky. They're like, wow, this guy's such an idiot. He doesn't know what he's talking about.
And he's a smart guy.
Well, not just that. It's like, you're down 40% in the bull market. Like, what makes you think that you have any right to, like, be cocky or, like, I just don't get it. So,
guys, yeah, the market's not that inefficient.
Yeah.
It's not a tiny little company out in the ether that no one sees. No, it's fairly looked at. Mm-hmm. But yeah, I think that the reason why we're covering it, and for anyone who wonders, like, why do you guys cover it, is because since it is so heavily talked about on YouTube, it's best to
hit the algorithm. That's why.
Not to hit the algorithm per se, but reach those people that kind of are on the fence and at least try to put a counter viewpoint, in which case they might be able to reflect and say, oh, maybe that isn't really the best investment and I shouldn't really fall for the crowd hype. And there's all these wonderful, beautiful investments out here that are more exciting businesses, more durable moats, and growing much better in terms of, like, earnings. So it's just, like, simply about touching that viewer or that audience. And some people are saying, no, F them. F them. Let's talk about OP stocks. Yeah, Jake's comments are great. Next stock. But the next one we are going to be talking about is also heavily covered by roughly the same crowd, and that's PayPal. Now, this one, we have some audience members, I know, because I saw you guys chatting already, that you guys are in the stock or you're fans of the stock. And so there is actually some overlap. We're kind of exiting the more clownish retail into more sophisticated retail meets clownish retail. So, like, there's like an overlap between these two groups. So... He goes, next stock. Don't worry, we are going to be talking about the OP stocks. Don't worry. The comments kill me.
Yeah.
Anyways, so
as you can see, Capital Mindset subscribers are very fond of retail stocks.
Very fond of it. They love it. But I mean, all right, you guys are hilarious. All right, anyways, we'll get through PayPal. Don't worry. We'll get through PayPal. We get through this segment, and then we move on. Don't worry, guys. Okay, so We got Apple. Don't worry, Jake. We're coming to Apple.
Can you do like the 1 month chart on this? I love this.
Oh, I know why you're saying, because a certain YouTuber was, I have no idea why he's so clownish, because he doesn't even know that my current year-to-date performance is probably like, he doesn't want to compete anymore if he knew.
I don't think his 1 year performance that he shows is anywhere close to either of ours.
Yes, it's a joke. But so yeah, he commented around here, this YouTuber, very large YouTuber who has nothing to do except sometimes comment on my tiny channel. And
But
yeah, and brag about PayPal. He brags about PayPal around here, and it's like, dude, how come you're so unlucky? You're so unlucky. How come? He literally comments like PayPal, winky face, and I'm like, oh, hope you make money. That's my response. Hope you make money. Blah blah blah. Cordial, bro. Life just does not. Oh my god. I mean, he has to cope with the fact that he lost more money in like 3 stocks and all of the gains plus that, and all the value of his entire portfolio and then some. So he's pretty clownish. But Internet Warrior, if you go to like one of the old PayPal live streams, it's a very new one. I posted it in the club because it was hilarious. It was like such a comment. But anyways, so PayPal, about the business. You have a business that, yeah, it's growing top line, it's growing bottom line, but what are you going to pay for that? So the question is like, what am I paying for that growth? It's not growing above and beyond the multiple. So like the PEG ratio, even on like a forward a basis, I think is like still above 1, if I remember correctly, based off sell side estimates.
I thought they guided for lower net income this year.
Oh, because of the higher EPS adjusting for buybacks, correct?
Right. And considering they're spending more than their entire free cash flow on buybacks, it's pretty significant.
Yeah. I mean, I think the diagnosis that we provided about PayPal has been proven correct, and that it was dead money. Like, you could do worse, right? And so this is not SoFi. Like I said, the sophisticated retail is sort of overlapping with clown retail, where they both like the same stock. And I'm trying to differentiate the two, where I'm giving credit to some of those retail investors who do like the stock. We have club members who are interested in PayPal, and they're interested in Adyen and the like. But they also admit Adyen is a better company, by the way. But we have the overlap between the two. And the diagnosis that we provided, at least the opinion on this channel, is the valuation below 70 is attractive, but there's so much better out there. And so I think that there's still going to be plenty of time for someone to acquire or add into PayPal if you really wanted it. But all being said is what's turned out or what's occurred has been basically what we've thought was going to happen, that it's frankly, it's dead money. So, or has been dead money. And so your favorite stocks are dead money. This is one of the prime examples. I think we're running out on the time to move on to Apple. If you want to touch on Apple, or you want to keep touching on this.
No, we can move on to Apple. I'll just give a quick thing on PayPal. It's another, like, why do you guys get fascinated with the most boring business models? Why are you all in fintech? Like, can you please rethink your life decisions? Just like, if you want to like ape into an industry, at least something cool like cybersecurity. Like, don't do like fintech.
Yeah.
But I do think that we should take a slight pause for a quick second, because this is an EU-friendly time zone stream. I feel like we're doing them a disservice by not asking who do you think's going to win the Euros.
Okay. Everyone say who's going to win the Euro Cup.
If you don't know, I'm a football fan.
Well, who do you think is going to win the Euro Cup? So you can't leave the audience to be the only ones answering.
Dude, I mean, I'm going to be boring and say Germany looks really good.
And
they're the host nation.
France, Ukraine. Okay. France. 2 people say France now.
Oh, you France people. How long is Mbappe out for? Isn't he out for... I don't know how long that injury... I know he was out last game.
Spain. We have a Spain. France. Forget Spain.
I would like to see... if the team I'd like to see win is the Netherlands, mostly because, so for those that don't know, when this is kind of a nasty topic, but when the Germany team won the World Cup in 2014, there was like a video of the coach picking his nose and eating it. And then in this tournament, there's a video of the Netherlands coach picking his nose and eating it. And so just for the memes, I would like for the Netherlands to win just for that. But I also like them, and they've come close so many times. And as a Liverpool fan, I like Van Dijk.
Well, I think there's no. I haven't seen Netherlands, but everyone's saying Germany, France. Oh, and the answer to your question was one game. A lot of Germany, France. I saw one Spain, but a lot of France.
Really?
Yeah, a lot of France.
France has won enough in the past, 10 years. They don't need to win again.
They don't need to win more. They're good. They're good. They need to chill.
Now, yeah, because I don't know. England just seems like a mess with their coach. It would be cool to see the Romania or Ukraine come out and do something. But anyways, we'll move on. Oh, and also I do want to say to Miguel, they said boring is good. No. Boring is good, meaning no one else is covering it, or it's an industry or a stock that I wouldn't say PayPal's boring because everyone's covering it. It's very hyped up.
Yeah, that's the key.
And to clarify to Milk Shakespeare, Europe's not a country, Africa is. So
where did Miguel say boring is good?
Right above where Bacon said you cowards.
Okay. Yes. So the question about PayPal being boring. Yeah, because it's not boring in the right sense. when an investor, when you hear a super investor, which we're not super investors, but at least yet, hopefully one day, when you hear the super investors talk about, okay, boring businesses, good businesses, etc., what they're typically referring to is not literally a boring business, but that it's not really well covered. No one cares to look at it. PayPal is definitely not one of those. You have plenty of shoe shiners. I'm not saying literal shoe shiners. If you get the so for those of you who do not know the reference, I'll repeat the reference. The reference comes from the 1920s, right before the Great Depression. So before the stock market crash, the adage came about that when the shoe shiner is talking about stocks, it's time to get out of stocks. So it's not like literal shoe shiners, and it's not meant to be derogatory. It's just simply meant to kind of talk about when people who do not know or probably do not know much about investing are discussing investments. What are they discussing about investments? What stocks are they excited about? And then you should be cautious about that. PayPal, SoFi, a lot of these companies, they fit that bill. And so they're not literal shoe shiners. In fact, some of them are financial advisors. But for the most part, if you actually look and dissect their ability to analyze a business, it's not very high level. It's not very or it is actually too high level. It's too much on the surface. More than they think. I think they think they're doing really deep dive investment analysis, but they're really not. So
we could do a boring investment or boring stock talk after Apple if you want. Just really quick, or an example of a boring business.
Oh yes, no, 100%. I can add more. So Jake's been waiting for us to talk about Apple. Now let me start off by saying Apple stock, as he pitched it to me, and he pitched it to me. I'll tell you guys exactly when Jake pitched it to me. Literally here, we had a phone call about a different stock. It was literally, I can't even time it better. He called me really right around here, and wow, it was insane. But yeah, he called me, and he's been a Apple bull for a very long time. For full disclosure, I didn't buy Apple. I did not participate. And he actually told me, well, based off of certain information or certain interviews, public interviews, is not insider information. He didn't have any of that. He said Apple is going to 100%, to his certainty, going to use OpenAI. And that's gonna be announced. They're gonna use ChatGPT. Now, the discussion we were having, and then I kind of took this discussion and extrapolated it to other conversations I had. But the discussion about how is that going to be done, who's going to pay for it? Well, fast forward, we know now what happened. and looks like Apple isn't paying a dime for it. It's going to be literally, oh yeah. No, I'm going to give you credit, Jake. No, don't worry. You said literally everything I said happened low key.
What?
I called this one to a T. He did.
So how is it gonna for my own, because for people that don't know, I'm not what I think you'd call a techie. I don't have any Apple products. I didn't watch or listen to WWDC.
Mhm.
How is it going to integrate? How is it going to work with ChatGPT?
So it's going to be utilizing just the based LLM, right? And you're going to give the opportunity for ChatGPT or OpenAI to receive the data that you're providing it through all the things that you're going to be using it for. It's going to be optional. So for example, I could care less. I don't really do anything on my phone. It's like, I don't want anyone to know about. And if I'm improving the product, fine. So I'm actually the kind of consumer that OpenAI loves, because I'm like, I don't give a shit. So it's going to be all done, at least far as the actual compute is going to be done natively. So you're gonna have the capability to be doing it natively with the new chip. So this phone, this is the, oh, it's so funny because it looks clear. So this iPhone is going to be not capable of doing those features. And if you do the beta for the new iOS, you'll notice that all the AI features are turned off. So this is the iPhone 15. I'm going to be getting the iPhone 16 and on and on and on. And so from now on, all the iPhones going forward are going to come with new silicon that is going to be capable of running native LLM calculations, or compute. The part that Jake was also really excited about was he actually believes this is going to be the next super cycle, and that everyone's always underestimating Apple when it comes to upgrade cycles. And I did not underestimate Apple in this sense, because I told, and Fuhat can be my witness because he mentioned it, that all the conversation we had last night about how Apple will always surprise everyone how much they can monetize their platform. And there's so many levers that Apple can pull at any given time to create $10 billion, $100 billion businesses literally overnight. Here's a stat for everyone. Did you guys know that the AirPods on an annualized basis is a larger business than Netflix?
Is it really?
Yeah,
What is
for
so
sales,
what
in terms
what
of
is
sales.
so
Yeah.
Okay, so question about AirPods, because I see people wear them. I obviously don't have them. What's the attraction with them? What's the unique, because they don't look like high quality headphones.
They're decent. The microphone sucks. So
Right.
if I want to have a phone conversation, they suck. Maybe the AirPod, or sorry, the Air Maxes, I think they're called. Those are, I think, better microphone, way better microphone. But the AirPods, I mean, how good a microphone can you make it in such a tiny form factor?
Right. So why are they so popular?
Because they look good. The sound quality is not the worst by any stretch of the imagination. They're pretty good for such a small, form factor. And the case, it integrates really well with your iPhone. Like, it serves as a tracker. You can track the actual case, the device. Very easy to connect, like super easy to connect. I don't think it's that much more expensive than other AirPods or types. And I think mostly it's the brand power that we're observing, because it is more expensive, but it's not crazily more expensive.
It's
in my
really
view.
funny. I still remember when they first came out. Was it 2017, 2018, somewhere around there? Which,
Yeah.
I want to say on the stock real quick. I was actually just in. It's one of those things, to say it's not for me. I feel like Apple's not for me. I've never bought an Apple product. I probably never will. I'm just very cheap, and I'm happy with my Android. But I figured, because it was blowing my mind. I was hearing retail investors talk about Apple, and this is when it was at that price, and they're all going Tim Cook's a bad CEO.
Apple Intelligence is available.
Sorry, I'm muting it. Continue. This is
No,
going to be
I'll
playing
stop.
in the
It's fine.
background. No. This is playing in the
Just-
background. This is
I'm
playing in the
just-
background.
But they're saying stuff like Tim Cook is a terrible CEO. He never did anything good. He never came out with any good products. And I was just sitting there. I was like, didn't he come out with the AirPods? And
AirPods, watch. He is the one who was leading the company when they went into their own silicon. which has been a game changer. No, everyone who denies that, you're wrong. You're just wrong. That's
They
a
don't
big
understand
deal.
because they don't see it physically. That's why.
Yeah, that is a huge deal because basically Apple has gotten to the point where they're more in control of their own destiny than everyone else. And all the other hyperscalers, they are rushing to get that same capability. They are rushing to get that. So having control of your own silicon, and there's more things that Apple wants to eventually integrate all in-house. Yeah.
And for clarity, your own silicon means what?
Your own chips. So your own processors in your phones, your own processors in your computers. So your own graphics cards. So they have integrated graphics cards in their now it's the M3 and then soon going to be M4. So the point of why that's so important is like now if you look at the performance, and it's all in the ARM architecture, the performance relative to power consumption, it's been phenomenal. And it's like compared to competing products, it's phenomenal. Like Apple has done wonders and they have to be given credit for that. And then going forward, I think they're in a really good position, regardless of anything in the new AI world. I'm just frankly, this is the one thing I am surprised about. I am a little bit surprised they didn't opt to go and lean harder into AI themselves, and they're using a third party. I really question that. That's one move I question. I think they want to do it because right now they can use or piggyback off of ChatGPT for free because, we didn't get into exactly how they paid for it. They paid for it by paying $0.00. They said the payment for OpenAI is our install base. So the fact that you get the privilege to provide the service to Apple users, and that's our payment to you. That's insane. That's amazing. Like only Apple can do that.
Yeah.
This is a monster of a company, but it's the price that
So Apple's paying them an exposure. That's amazing.
That's amazing. Yeah. It's the same thing that, Microsoft didn't pay $1 for OpenAI. They said, you can use our cloud. That's your payment. No dollars. You get nothing. You get to use our cloud for free. So by the way, at the end of the day, it's actually not even OpenAI that's paying this. It's not. It's Microsoft. Because OpenAI gets Microsoft Azure usage. And I don't even know if they're fully on Azure yet because it takes some time. I think they were originally on AWS. So by the way, this is a blunder on AWS if OpenAI ends up being this wonderful investment for Microsoft because OpenAI was originally on AWS. Fun fact. Okay. And so until that transition really fully happens, there's a part of OpenAI that's still on AWS, and then a part of it that's moving on to Azure. But presumably, let's say longer term, it's all 100% on Azure. The true payer of this Apple usage is going to be Microsoft. So yeah,
I'll be right back. Let me just go. Dogs are going off, but I did want to say something on this. It takes me 30 seconds. Be right back. It's going to have them come inside.
Yeah. And so, okay, the all old adage, large cap tech, bro. Yeah, look, to an extent, I know that people might be like, I guess, maybe overdosed with the discussion around large cap tech, but at the end of the day, these businesses still have a unimaginable runway. Now, the valuation you're paying for it is kind of a stretch. Like Apple, man, it's tough for me to justify paying over 30 times forward earnings for a company that's growing, even assuming the super cycle occurs. I mean, I don't know. They could get the Costco treatment and you could get continued, revamp on the valuation and multiple expansion. And sure, yeah, you can assume that. Or you get maybe multiple maintenance and then the multiple maintenance plus the growth, then that's your rate of return. I don't know. So Apple, at the end of the day, I'll just say this. Everyone always underestimates it. They always think that it's peaked and they always prove them wrong. And then every next cycle, people say, oh, now it's peaked. We'll see, until they're proven wrong again. And I think Apple as a ecosystem is the only one that I observe that kind of absorbs new people. And then the Android system is the one that always loses people. Because I've seen, like we were talking about this last night, there's plenty. It's more often than not that people in the Android system will try the Apple system and then don't come back, versus the other way around is they always come back. They always come back. And I don't agree with the whole cost as being a reason, because Apple has offerings that are cheaper. They don't have, you don't have to get the flagship. I don't know why people think that there's only the flagship. And by the way, for those of you who don't know, iPhones adjusted for inflation haven't moved in price. Fun fact, mic drop. There was a period of time where they weren't adjusting the price to inflation. And so iPhones were getting cheaper and cheaper and cheaper and cheaper. And right now we're going through that period. So there's going to be a new cycle one day in the future where they up the price again to adjust for inflation. And then people are going to be like, oh my God, I would never pay $1,500 for a phone. It's like, no, but the dollar has also gone down in value. So they're just keeping it the same. So if you go to the original iPhone release and the new current iPhone, actually right now, because they haven't increased the price in a bit, it should actually be cheaper than the original release.
How's their margins been impacted? Their margins gone up?
Yeah, the margins have remained flat or gone up.
Well, I don't know. Apple's just one of those things. As you know, there's certain industries I don't touch, and Apple falls in one of those. Although someone could argue like Apple's so big, it's almost like a staple.
That's probably why people justify the margin. But I'm sorry, multiple. But I don't know. I can't bring myself. Bring myself.
The thing though, I find hilarious. Can we just dunk on someone, then we'll move on to the next thing?
Yeah.
I really want to dunk on this person.
Yes, go for it.
Can I just share my screen? Here, I'll just.
Yeah.
And I sent this to Jake when this person made this video, and it was on May 2nd they made this video.
Oh, it's this guy.
This person, yeah. So he's talking about how Tim Cook's an idiot, how he would run Apple differently, how he doesn't spend enough on future products or services, and that what's the founder's name?
Steve Jobs.
Steve Jobs would be sad to see what happened to his company. And this was on May 2nd. So, I mean, the price since then has done what? When I saw him say he'd be sad to see what happened to his company, I'm like, what? Like, what are you? So since then, it's up 20%, we'll say.
Well, I mean, he's a really intelligent person, one of the greatest investors of our time. So he definitely doesn't make all his money from, scamming people.
No, he'll be a hedge fund manager.
Yeah, he'll be a hedge fund manager one day. So yeah, Apple, people underestimate it. I think we have a bunch of other, interesting companies that people can talk about. What's one of the boring ones you wanted to talk about? So we'll get through that first.
We can talk about one that we've talked on here publicly already, if you want.
Yes.
Gas station company.
Oh yes, let's talk about it.
Yeah. You want to see a boring company?
Bro, insane.
Yeah. Where we were pounding the table at like 250. I'm actually, no, I don't think it's quite a double for me yet.
It should be close. Should be very close to a double.
It's very close in like a year and a half. But like no one talks about this company. It's a boring, it's gas stations. I'm sure all you guys know Murphy's Express, or maybe many of you do.
Oh, let me answer this question. Mohammed, no ICOM later because there was already an ICOM this week. For anyone watching, for context, ICOM is the private streams we do for the community. So ICOM, you can check out the latest ICOM that happened last Tuesday. It should be in the ICOM section in the club.
Mm-hmm.
Okay.
So that's a gas station company that's very efficient. They have a really good relationship because they were a spinoff from Murphy's Oil.
Yep.
And so they still have that relationship with them, and their cents per gallon margins are better than most gas stations. And they buy back a lot of stock. And then right now they're going through increasing and finding ways to increase people to come into the store and buy more things in store. But
for full disclosure, everyone, I was the clown I sold around here.
You looked
I was
really
like,
smart.
Oh, damn, I look smart. Then it went blah. But I missed out on, actually looking at this doesn't make me feel that bad. 26.94%, because my average return this year has been in excess of that. So If it was above my average, then I would have been sad.
When did you sell? Was it right at the start of the year? Is that
Right around here, because right after I sold, I looked
Wait,
really smart. I was like,
is
oh
this
my
bringing
gosh.
my performance down for the year? That's sad. Or is it
Yeah,
right?
yeah, well, the way you can judge it is it below your average performance or is it above? If it's above, then it's a net contributor. If it's below,
Oh.
then it's a drag. But if this is your drag, Andrew, if this is your drag, congratulations.
right? So, oh, it's 33%. No, 34% year to no, then that's not a drag.
Oh no, for me, because I'm talking about like the necessary timing right here. But
Okay,
still,
okay.
even for me, because this year's been an insane year.
And last year and the year before, but
And last year and the year before, yeah. But yeah.
So yeah, so that's a boring business. You could talk about
I'll talk about one public. I haven't talked about it yet, but I just bought it. It's very
Okay.
small. It's not very material. I won't talk about the actual boring one, but because there's one that I bought really heavy. I'll talk about it one day publicly. I kind of want to let it fester some more, a couple months. But what's their ticker? And because it's not an American company. Let me find it here.
oh, that one. The other gas station stock?
Yes, because we have to talk about it now because it's ANCTF. This is the ADR. Alimentación custa.
No, you have to say it like an American. It's that good old couch tard.
Couche-tard. Couch-tard.
Couch tard.
That's how I say it to the French inclined people within the club. I say couch-tard. I bought couch-tard. I wonder if like a little piece of them dies every time.
It's
But-
a lot bigger, huh?
Yes. So behemoth compared to Musa. So Musa is a little itty bitty fish. And honestly, Couch-tard could buy them one day. I don't know. That's like their strat. But who knows?
Mhm.
Actually, I don't know if
I
they
think
would ever
it's
do
too
that.
big. It's too big.
It's too big.
They buy smaller. They bought all the gas stations in my town.
So I hope that this business buys Buc-ee's.
No way. Bucky.
I want them to buy Buc-ee's. No. It's a wish. It's a wish. It's not I'm trying to manifest a dream because I would love to own Buc-ee's.
What do you think the value? I don't know. Would they be able to buy Bucky's?
I don't care. No. Listen to me, Andrew. Listen to me. I don't care what they pay for it. I'll support it. I don't care what they pay for it. They could pay the whole market cap right here, put this company in debt. I will hold through a small position because I don't want to, burn money, but a small position just for the ability to own Buc-ee's.
Okay. Trophy asset.
Yes, I don't care. I will burn this company to the ground.
For the Americans in here, this is Circle K.
Yes. So you might know them as Circle K, correct? But they have several brands globally. So this is basically like a global gas station brand. They also have been buying up other businesses adjacent that are like little small grocers. But this company has been really good at M&A. You've probably heard this company before. I mean, it's not like it's not covered whatsoever. And the multiple is now actually lower than Murphy's. Although I'll say this, Murphy's capital allocation strategy is hyper aggressive buybacks. Like, we don't know why Murphy's was even trading where it was back over here.
Oh, I
like
know
this
why.
was why the margins, right? The fuel margins.
Yeah. So if you go back before COVID, so COVID was a big displacement, right? So especially before 2022. If you go back before that, I want to say 2019, maybe early 2020, their cents per gallon margin was like 18 cents per gallon. And they got up to like 30 cents, which is a lot. Massive difference.
Yeah.
And so one of the things a lot of people thought was they'll go back to 19 cents. And if that happens, understandable, they should have sold off.
Yeah.
Management was saying, though, and they had said on calls, which is one of those things where, do you trust management? They said our low, like basically our new bottom end for cents per gallon is 25 cents. And so if you believe management, which I did, the CEO who's been there, he's got a really Chad name. And they've been able to maintain that cents per gallon margin. And so that's basically it.
And they've been plowing pretty much everything into buybacks.
Right.
So we can probably talk about another one. I don't know if we've talked about publicly. Another boring business, buyback machine. Because it's already been something that we talked about in the club for a long time now. So it's like
Allison?
Allison. Yeah,
Okay.
we can talk about Allison. But before we go to Allison, let me just state that nope, I didn't mean to do that. I just always forget. I don't know why I don't have this ticker memorized. I have most tickers memorized, but some of them I don't still. So alimentation custa. There you go, you French people. Oh, we can talk about Lamb Weston too. So yeah, this one's similar to Musa, also just buys back shares. There is a dividend, and frankly, I'm in a position I don't want the dividend. Dividends are icky. But no, I'm kidding. I like dividends. Dividends are as a natural consequence of just your portfolio growing. You'll just make money, and you'll be like, oh, dividends. But alimentation custa. Come on, French people, you got to give me feedback. Am I doing better with the pronunciation? I want the feedback. But anyways, so the business also is doing tons of buybacks. They actually just reinitiated their $4 billion buyback. So that's, as far as the market cap goes, it's pretty significant. Like they just completed one. They're doing another one. The multiple right now for this company is now lower than Musa, but Musa had multiple expansion plus earnings growth. So yeah, the best of both worlds. You also have the Casey's General Store. They have the highest multiple, and they've done really well as well. So gas stations as a whole, it's now boring but sexy.
Yeah,
it's now.
Someone asked about this one. I've seen people ask about this before. Ticker DINO, Dino. HS Sinclair.
We have never covered it.
People asked me before. I think when I was maybe originally looking at Musa or when I was talking about it. It's like refineries, and I think because it works in that space, it does like gas refineries, oil refineries. But I would say it's very, very different from like Musa or Couch Tard.
Yes, we got to make that a thing.
Gustav.
Gustav.
But so
we'll do the other boring business, Allison Transmissions. Why is this one boring?
They do have like 300, 400 actual gas stations, but a large part of their business, I think, is so it's not as much of a pure play. Allison is boring because they make transmissions. How boring can you be? It's in the name. So they make automatic transmissions for trucks. So their target market is like garbage trucks, delivery trucks. They're not as big on the like highway trucking, because highway trucking, the automatic transmission doesn't make as big of a difference. But when you're like driving a garbage truck and you're constantly stopping, starting, it makes a big difference. Same if you're driving like some kind of like box truck. And they trade at a really cheap multiple and buy back a crap load of shares.
Yep. And they talk about that every earnings call, like how many shares bought back and how many shares they bought back since they IPO'd.
Yeah, which is a lot. Let me see if I can find on the last transcript.
60% last time, if I remember correctly. 60 to 50%.
And they're really, I think they're really interesting here. I was really surprised by the pop. Basically, they're going through, and I've talked to club members about this, but they signed long-term contracts, and so the last long-term contracts they signed was in 2019. And one of the things that you've seen is they've done well, but their gross margins have gone down a bit because the contracts don't adjust for inflation. So you sign the contract, and maybe the new contracts they will, but up until 2019, inflation wasn't a problem at all, so people weren't building that in. And so now they're going to go back and say, okay, we just went through 5 years. You guys are using our product. Our margins have gone down a little bit. Like, we're basically going to increase prices. They also make transmissions for military tanks, by the way. I forgot about that part too. And then they also do certain energy rigs. So basically, that's kind of their target. And I think that when they go through this contract renegotiation cycle, which will hit their revenue in 2025, you'll see a big pickup. While they're buying back the stock here at, like, it's a buyback machine buying back the stock at like less than a 10 forward PE.
So for everyone listening, that's over a 10% earnings yield.
Yeah.
Yeah.
And, they have the cash to do it. The one thing you're always worried about, is there someone who's vertically integrated, like a Caterpillar or something like that makes their own transmissions that could really crush these guys? But it seems like their transmissions have been well received. They used to be like kind of a crappy product when they were owned by the PE firm, I guess, was the known thing about them. They've really changed that. From what I understand, they've changed the perception and on their transmissions. So boring business. Well, I think it's kind of interesting in a way, but boring. It's done very well. And yeah, I hold it currently. I don't know if you hold it.
I hold it.
Okay. It's a core position for me.
It's not core position for me.
Check what percentage it is for me. I don't even.
Yeah, I'm probably going to be building it out a little bit, but there's one that you love that I just bought a good amount of, and maybe I can talk about that, even though it's fairly new, but F it. We've already talked about it publicly, so it's not like this it's a secret bull case on this channel.
Yes.
And you love talking about it, so we're gonna freaking talk about it. And I'm incentivized to talk about it because it is now a decently sized position. So, and I think you wanted to talk about energy, not energy oil, the other energy.
Yeah, the energy, like your coffee cup in the morning or the Monster in your hand right now, because that's what Fabio, I think, bought quite a bit of. People are worried right now with the energy market. I think there's like this thing, I know, like Joseph Carlson, for example, asked, are we in a caffeine bubble? Which is, I think he lives in Utah, which I think like regionally, he's going to very much think we are in a caffeine bubble then. Because I'm pretty sure, and someone can correct me on this if I'm wrong, Church of Latter-day Saints, you're not allowed to drink caffeine. I'm pretty sure. And so if you live in Utah, you're going to think like, what's going on with caffeine? But so you have these companies here. You had Starbucks, you have Celsius, and you have Scanner Data. They're all saying like, hey, there's a pullback in the overall purchasing of caffeine products. It could be coffee, it could be energy drinks, whatever. And so what happened is you've seen a sell-off with Monster. There's a couple other dynamics that I think is somewhat company fundamental non-related. So what you've had like kind of the macro, and when I say macro, I mean like, I guess it'd be technically micro, but the energy market having some problems. Celsius has said our numbers aren't as good. The Monster's earnings call was on forward numbers, even though they don't give it. They gave a little bit of indication. People were a little concerned about how that looks moving forward. And obviously we know Starbucks was a disaster. Same-store sales and all that.
How dare you?
And so I think there's a pullback a bit in certain consumers, but there's a saying that we have, right, is that Kyle's more loyal than Becky. And Kyle is the construction worker who gets up every morning. He buys his Monster. It's the green Monster. He's been buying it since 2008. He's like, okay, he goes to work. And Becky's going to Celsius. She's going to Starbucks. Because
Alani
knew. And Alani knew. I called that too. I was like, dude, Alani knew is coming for Celsius. And they've been growing super fast.
I've been seeing it at the gym among the gym girls. Like they'll have like they used to always have like a Celsius. Then I've started seeing this Alani. It's like this little cute can.
Yep.
You know, the little colors. They like the colors.
It was made by some. It was started by some, I think, Instagram person, Katie Hearn. I don't know who that is. Fitness influencer. So yeah, I was like, that's like the exact same demographic target market as Celsius. But I think I told you this. I was like, oh, dude, Alani's coming for Celsius. But the point is, so you have, and I wanted, it was funny because I wanted Monster to buy them. They were looking for sale, like they were trying to sell themselves like $1 billion like a year and a half ago. And I was like, dude, because
we will. It's a whole category we're talking about.
And I think that if Monster would have bought them, you just cut out. They have like these like protein and these other like lines. You just cut all that because it's crap. You keep the energy. But anyways, when it comes to Monster, there's been a massive sell-off. And if you can pull Monster up.
Yes. Oh, should I say which company? Because I think I confused everyone by bringing.
Yeah, you bought Monster.
I bought Monster. I bought a lot of Monster.
And so what happened with Monster was, so you have like the broader concern over energy, which like, I don't know. I think it's going to be overblown, but we'll see. I don't think people are buying less like caffeine. I don't see that happening. So then with Monster specifically, you can see it really right there with that sharp sell-off. What's the date on that, by the way? Like that last drop, that last sell-off. Is it like
June 7th?
Dude, when did the tender offer close?
June 7th.
No, June 6th.
June 6th. Sorry.
So
sorry, Professor.
Yeah, you idiot.
You fucking moron.
I can't say that word. but so Monster did a tender offer. And a couple things happened was it's the CEO and founder, Rodney Sachs. He's basically retiring. And he's had this guy handpicked that he's been co-CEOs with since 2021, I think. So it's a very smooth transition. I think it's about as good transition as you can have. But they did this $3 billion tender offer as a way to give them exit liquidity. It's like legit exit liquidity. And their thought was without crushing the share price. Or maybe that's what I thought was the theory behind it. Well, the tender offer happened. And only 47% of shares tendered were actually bought back, which means you had a $3 billion tender offer, over $6 billion worth wanted to participate. So what happens? Tender offer ends and people go, oh, I didn't get it. I'm selling my shares. And there was like a whole arbitrage thing. There was a lot of stuff going on there. So what basically happened was I think you're seeing a sell-off that's related to tender offer not going through and people saying, fine, I'm just going to sell here. It's pretty close to the tender offer price anyways. And like just the general concern around the CEO and everything and just seeing what happens there. So I think Monster has sold off pretty aggressively. And I think that sell-off there from June 7th to here is unrelated to actual fundamentals of the business. I think it's related to just kind of dynamics of people trying to get out. And I point this out to you. If you look at and you showed me the max drawdowns on this. I don't know if you have that chart, but I just look at it on a forward valuation basis. If you generally buy it at this valuation in the market with Monster, always gives you a couple opportunities to do this. It's like at least once a year, you'll get an opportunity to snag it at like a lower cost basis or a lower multiple. And then, really you just have a de-risk position that if it returns back to its previous valuation, you're going to get a lot of significant share appreciation and price return. And then the other, if it doesn't, then I think you're kind of already de-risked.
It's on based off sell side estimates. It's on a forward multiple of 23,
which is really good if you compare it to peers.
Yeah, if you also take into account or consideration that super surface level analysis, you're not doing anything deeper than this for now. But if you're just trying to do this kind of analysis, you can kind of map out how this works. So you have Coca-Cola. What makes Coca-Cola for its multiple? Well, it's a very defensible product, very defensible moat, the distribution network. It's not growing much, but market assigns it typically anywhere between, on the low end, like on a really low end, 17, 18 multiple. And then on the higher end, I've seen it go for 25 forward multiple. Because it's just not growing. And I'm talking about, it gets to maybe 17, 18 on like a big market sell-off. If that, right? I'm being a little bit generous because I don't actually think I've seen it there. So, you know, for the category, it's fairly normal. You look at PepsiCo, same thing. Now, PepsiCo has a snack foods business, but because selling the syrup is actually the part that's really attractive. And then you have Monster. So Monster and a few others like Keurig Dr. Pepper, but Keurig Dr. Pepper is plagued with Keurig. That's what the market doesn't like. If it was just Dr. Pepper, I promise you, it would be
really Keurig. Is that because I feel like Keurig K-cups are? Is it a bad business?
No, it's not bad. It's just not as good.
Oh,
so
that's fair.
put them together, and I don't think you don't get the same. The market doesn't assign the same multiple if you put them together. I promise you, if Keurig Dr. Pepper spun off Dr. Pepper, that would have probably somewhere over 20. The market would be like fervent about that. But together, it's trading at 15, 16, 17. And it's not growing much, but still a fairly defensible business. And again, the Dr. Pepper side of the business right now, especially because they've just overtook Pepsi in like brand recognition, which is insane, is the more exciting part of the Keurig Dr. Pepper business. But Monster is growing faster than all of them. And so if you're saying it trades at a 23 forward multiple in 2025 sell side estimates.
Let me also say, one of the things, another dynamic that people probably don't see as much, I wouldn't say it's fully penetrated in the US, but it's pretty penetrated. It is growing very fast in Europe and very fast in with China, but Asia, like Southeast Asia in general. And they're breaking into India, I think now.
And let me also say with Jason D, your comment on Coke performs better than KO. Yes, however, you got to understand where did they start out? Coke, COKE, they had multiple expansion. Well, KO pretty much has traded a high multiple for quite some time. And so Coke, which is the bottler, has done really well from just growth plus multiple expansion. And so, of course, you get that outperformance. But guarantee you, if they both started at the same multiple, right? When you both started, they started at the same multiple, and you saw the two different, let's say, equal growth rates between the two, but COKE was growing faster on top of that. So of course, it's going to outperform because KO has already basically been, you're seeing it as a mature business. So it's already matured out, and now it's basically just going to grow in line with more or less inflation, maybe a little bit more, maybe a little bit less. It's already conquered the world, is what I'm getting at. Coke hasn't yet conquered the world. There's still like some price movement that, you could increase prices, etc., and more efficiencies could be had. But also the market has appreciated it more across time, meaning they're willing to pay more for every dollar that it earns. So yeah, of course, you're going to get really strong outperformance there. But Monster now, they own their own bottler, correct?
Yeah, because when they bought Bang, they got the bottling facilities.
Yes. And yes, KO is more than Coca-Cola. Absolutely. Of course. It has a huge portfolio of brands. But every new acquisition they do doesn't really move the needle. It's already conquered the world. KO has already won as far as the drinks war. It's just going to grow in line with the category of drinks. Yeah. Any acquisition they do, it doesn't move the needle.
I'm just looking at this, by the way. Mexico, Monster, it's because they're growing internationally pretty fast. And you could say, if you're a Celsius bull, this is just more runway they could potentially have there. Although I think you do have some execution you have to hit. But 23% growth in Mexico. If you go to Europe, though, it's crazy. 16. Oh, is this a retail share? Hold on. Let's see if they show. And EMEA. Oh, they're just calling out they're saying they're taking market share everywhere in Europe. Yeah.
So this comment real quick about there needs to be consolidation in the healthy energy drink segment. I think that, this is actually a huge risk potentially for Celsius. because they are skirting the line. They're like right on that line of false advertising. Because if you look at the cans,
What have I always said about Monster versus Celsius? The difference.
Monster knows they're unhealthy and they don't pretend otherwise.
Right.
What did you just open?
Sparkling water.
Oh, damn it. It opens a Monster.
No.
It's like this man has coffee, then a Monster. So the Celsius, if regulators do end up wanting to come after this really hard, that could be very harmful.
I don't think they will.
I don't think they will either, but they could. You never know. You never know.
Okay, here we go. In EMEA for Monster, which is Europe, 32% year-over-year increase, currency neutral.
Okay.
I mean, dude, 32% in Europe. I mean, so they can continue to grow there too for a while. So, but
all right, we'll have this energy drink conversation. I'll send it to you on Twitter. Wait, actually, I gotta remember what my Twitter login is. Hopefully it just works like this.
Let's see, first quarter.
Okay, hold on, because I killed all my cookies, so now I have to re-log in, and it's like asking me for verification.
Energy drinks are the next tobacco. I don't know what
my username is.
No, guys, it's a sparkling water. It's a LaCroix. It's not a.
Oh, I have to put the ad symbol. Incorrect. Please try again. That is my username.
Most important point of the
Okay, I'm gonna have to play some shenanigans here. All right, let me do it this way. I'll figure out this login thing. Okay, so I'll just send it to myself. All right, I already sent it to you, so I can just copy this link. Copy link. I can go on Twitter on my phone. Paste. Boom. All right, sent.
What are we doing?
Chris wants to come on to talk Celsius.
Oh. What's the valuation at now?
Well, it's come down quite a bit now. I mean, it's come down from the 90s now to the 60s. Here we go. Hello, Chris. How you doing? Mike check.
Good. Can you hear me?
Beautiful. Now we can hear you.
Okay, cool. Man, I love this conversation on Celsius because I always find that some of the craziest investments and the ones that have really good returns are usually these mini hype cycles that come around that no one really notices. You remember when we were kids? I mean, I don't know how old you guys are, but remember the year that those yo-yos came out and then everyone was doing those yo-yo tricks? Remember that? And then the year that fidget spinners came out, everyone just was playing around with those fidget spinners. One of my friends, this dude, he bought like 150,000 fidget spinners from China and just sold them for like $1, $2 a piece. The dude made like a killing on them. This is kind of a very similar thing right now where I think Celsius is in this healthy energy category, or at least tries to make the category like, hey, you can drink energy drinks because they're healthy. They're okay for you. Even though it has 300 milligrams of caffeine, it's going to be fine. So, I think there's still a lot of room for growth in the specific industry, but one of the things that happens, I mean, this is normal business cycle. You guys know what? I think it was George Soros or Stanley Druckenmiller that said there's 3 times you can make money on a hype cycle: when the run up is happening, when it's coming down, and then you can make money as it consolidates and just put some winners and basically ride the wave higher, right? I think right now we're in the same thing with Celsius right now, where the amount of hype, especially the last couple of years, have been really up there. And eventually there's going to be some consolidation. Right now, all these competitors are jumping into the mix, like the Alani News, like you guys mentioned. There's even some other ones that are coming out just randomly. And the thing is, as they fail and they consolidate, and the only ones that are going to be left on the store shelves are going to be the Monsters, the Red Bulls, and the Celsiuses. I think each one is going to have its own benefit. Red Bull, I think, is entrenched so much into the category that's not going anywhere. But they're a private company, so we can't touch them, right? Monster is the same thing. So go ahead. Sorry, man.
No, you know what Red Bull dominates, because I think of all of them, Red Bull tastes like absolute garbage. But it's the nightlife, the club aspect. Like you get a vodka Red Bull, you don't get a vodka Monster.
You want to talk about unhealthy?
Dude,
vodka Red Bull.
No, Red Bull is disgusting. Like tastes like medicine.
Dude, I'd argue that the base Red Bull tastes better than base Monster.
Oh, I've never had base Monster ever.
It's disgusting.
It's disgusting.
Yeah. Oh, it's terrible.
So my favorite among all my energy drinks that I occasionally partake in energy drinks, of course, but is watermelon Red Bull. Watermelon Red Bull is delicious.
Oh, okay.
You know.
To be fair,
What's the color on that can?
Red.
It's a red. Okay.
Yeah. No, but the point is, once you get to the point where you're in escape velocity, where you kind of become part of the culture, you can eventually, you could be fine. You don't have to do much else. And I think Celsius is really doing that hard when it comes to its marketing, where they're really trying to get in your face to the point where, you are going to be reaching for a Celsius. That's why, like, if you look at one of the key investments that they've been making the last couple of years, and especially they're ramping up this year, is one, product placement in their retail locations, but two, making these Celsius branded refrigerators. Have you guys seen those around in the vending machines?
Oh yeah, I have. Yeah.
So this way, what happens is it's kind of like in your face all the time, and you feel like reaching into it. It's kind of like Coca-Cola and RC Cola. They're both essentially technically the same thing. I mean, yeah, there's probably a little bit of appreciable difference between the two, but essentially, if you're looking for a cola, that's what you go for. But no one buys the RC Cola. Everyone buys the Coca-Cola. So right now, Celsius is really trying hard to make sure that they are imprinted into everyone's brain that, oh, if you want to drink an energy drink that's healthy, you should drink a Celsius.
Yeah, but my thing is, at this valuation, and especially because now they're expanding internationally, right? We all know, like, the way Monster has executed on that, and I think it might be a little more difficult for Celsius only because Monster basically acquired was it Predator and Burn, which are just like cheap energy drinks, because it's really hard if you're like Celsius. I don't think they're expanding to these kind of markets yet, so maybe they'll figure that out when they get there. But if you want to go into the Latin Americas, I think even Monster called out on their earnings call, like the brands that are growing there aren't Monster, just because like the expense, like, Monster here is like $2 or $3, and that's like whatever. When you go to Latin America or Central America, that's a different story. Same thing with Southeast Asia. That's the concern I have, is like you're going through this, and yeah, in the American market where Celsius is somewhat already penetrated, they could grow obviously their share, but I'd be worried about how that international expansion looks.
Well, let me clarify something really quickly. Someone in the comment section, this guy is a heavy Celsius bull, and that is absolutely wrong. Essentially, my strategy when it came to Celsius was there was a lot of hype behind it. It was going to ride up. It had a lot of great numbers behind it. I literally made a crap ton of money on the way up, and I also made a lot of money on the way down. I think right now, when it comes to Celsius, I agree with you, Andrew. It's definitely, in terms of valuations, a little bit overvalued relative to their growth rate, which is slowing down significantly. But a lot of that is primarily because of the channel inventory coming down, where now you had Pepsi last year buying up all this additional inventory. And now all of a sudden Pepsi's not buying as much inventory because it's already in the channel. So you're seeing this year of a huge amount of slowdown in their growth, and that's fine. I think that's normal. Now, where I think the potential for Celsius in the future, I can't tell you where it's going to top out at. It's just you never know. That's like saying what's the top of Monster, right? Or what's the top of Coca-Cola? There is no top.
Right.
You know, it's one of those things. It's a consumer packaged goods company. Every year, people are going to be consuming, and the prices are going to be changing and fluctuating. The business is just going to keep adding value back into its original balance sheet, and it's just going to keep growing. The key is, does Celsius have enough of a how do I say, like, unforgettableness that they actually get into escape velocity where they can take a sizable market share and then stay that way and then do what Monster did, which is grow 15% year over year consistently for the next 20 years. Because if they can do that, this is a great company to invest in. If they can't do that and they die on the vine, like every like, what is it, 99 out of 100 consumer packaged good companies, then you got a problem. So the question is, do you think that they have enough of a understanding of this business that they can keep going 15% a year like Monster has? Because I think that's the key for me. And I can't say 100% if that's the case yet. I do know that they're going to have years of growth for the next 5-6 years. The one thing I'll say, though, is that their European expansion, I think a lot of bulls got too greedy in saying, oh my God, these guys are going to dominate Europe in the next 6 months. And that's not how anything works. You know, like it takes a really long time to make up for that difference between the growth rate of 100% and then coming down to 35. The question is, over the next couple of years, are they going to be able to kind of like consolidate and keep that growth level that evened out? That's the kind of businesses that I love, man. Not the businesses that do 100% one year and then do, 10% another year. I'd rather have a business that does 15% a year for the next 20 years. And that's the key. Like, do you think Celsius has that ability to go up and to the right?
And it definitely could. I think the concern I still have, though, would be if you look at Monster's history, and this is like, if we're comparing, basically, this is saying, can they do what Monster did? And just, like you said, compound that growth rate, 15%. Monster never went over a PE on a forward basis of like 40. And so I would still be, and like, I think you said this, the valuation got stretched. And I never shorted this company or anything, but I told people, I was like, because there's one point, I think, and for people that know me, I think like CrowdStrike is the best company you can have out there. And I was telling people, I was like, dude, this is more expensive than CrowdStrike. Like, and I was just concerned at that point. Now, obviously the valuation, the multiples come down a lot, but it's still pretty high, like a 50.
It's 54 forward.
Okay, I have normalized, so it's a 52, but yeah, which is nice because it means they don't have much SBC. But no, like, and so the question, I mean, like, if you're very long-term minded, potentially it doesn't matter if you think they can hit that. But I don't know, like, I think people know I only look out like 2-3 years a lot of these things. So, yeah, I mean, we'll see what happens. And I guess I'll add this too. I have said that Celsius has executed magnificently. Like, you can't deny that. I just always thought the valuation, like the past, I don't know when we started, maybe like since the start of this year, maybe like I was just like, valuation feels stretched. If it came down though, at a certain point, I'd buy it because they have been executing insanely well.
They're profitable, and I think the business model is something that I really like about these guys. We take a step back and look at their business model. Essentially, what they've done is designed a energy drink. They send it to co-packers who do all the producing and pack it up and then, canning, and they send it out. And basically, if you look at their total headcount is like 750. Most of their employees are more concentrated on doing the marketing rather than doing, hey, let's figure out how to, hire more crane operators or build more manufacturing facilities. Like, these guys are very capital light and profit heavy. So right now they're a profitable company. They're doing well on that regard. The only thing is that I would say is they're really under the thumb of Pepsi now, where before they might have had a lot of flexibility to do things. Now they have to do everything kind of what Pepsi says and how Pepsi does it. And the one thing I have noticed, I don't know if you guys noticed, Pepsi has a way of killing brands.
Yes.
You know, so
That was-
that's the other. Yeah, go ahead. Sorry.
We had that. No, we had that concern. We talked about this off camera, Andrew and I, about like Pepsi's ability to kind of come in here and just like press their thumb down a little bit, which maybe that's just like, I don't know if they could have had Coke as a partner, because like Coke is married to Monster. Exactly.
You could, because the shelving space that Coke has. I mean, for Coke, that would have been problematic one way or another. So it'd have to be through Pepsi.
Yeah. Like Pepsi is a bit of a, pardon my French, an asshole to work with.
Well, we'll see what happens because, and I'm sure you know this, Chris, and I think we talked about this before, Fabio, but Pepsi has a really, really bad track record with energy drinks. This is the first one that's gone well. So I don't know if you know this.
No.
Rockstar.
So hold on. Let me just say something. The reason why Celsius has gone where it has is because it didn't have Pepsi's influence. Now that it does, we'll see what happens. Yeah.
Right. Because Rockstar was the first one. So like, because like, you know, Coke said we pick Monster. That's gone well. And also the other concern is there's been a couple times Coke tried to come out with their own energy product and kind of replace Monster. Coke tried to kill Monster a couple times. They came out with like Coke energy drinks and stuff. The problem was it just never worked. So they kind of like went like, if you look actually on Monster, maybe people don't know this, Monster has a reporting segment. And it's something like Monster, they have a name for it. It's like Monster Special something. It's pretty like insignificant. But what that is when Coke finally threw their hands up and said, fine, we're going all in on Monster. They're like, but you have to buy our shitty energy products lines from us. And so that's what that line is for Monster. But so that could happen too, because Pepsi might say, okay, we've been working with them long enough, we're going to try our own thing. But to go back, first they had Rockstar. Rockstar just never took off. Well, then the next company Pepsi went all in on was Bang. And we know like the woes of Bang. And now it's Celsius. So maybe third time's a charm for them. But it's going to be rocky. Like it's going to go up and down. These Cokes and Pepsis they want to own everything. They want to have not just the distribution. If they can, they want to have they want the distribution on the shelves to be their product. Because they bought Rockstar. They didn't buy Bang, but they had bought Rockstar. Actually, I think they bought Rockstar out so that they could, because they had the deal with Rockstar, so they actually bought them out so that they could switch it to Bang.
And now who owns both of them?
Well, Rockstar is still owned by Pepsi.
Rockstar is still owned by Pepsi.
Yeah. Bang is owned by Monster.
Yeah. Which is funny how that works. But so Rockstar is still kicking around through Pepsi?
Kind of. Like you can find some Rockstar somewhere. But it's not. It's not
doing well. Yeah.
I think if you have let me pull up, if you look at those like market share things, like it's not going well for them. I can't pull it up right now, but
I think I can get it quick here because I know where I can find it.
You can find it on the Monster slide, I think, but
by the way, I'm in agreement with you when you said if it gets sold off enough, it'll be worth buying, but it's going to be a while before we get back there again. You know?
I agree 100%.
Yeah.
And well, we don't know. Like this markets are wild and like give you opportunities when you don't expect it. Cause like we could like wake up tomorrow and it's like Celsius sold off 30%. And then you're like, okay, well, what just happened? Who knows? But Rockstar, I hate this. It's like
Rockstar TNA. It's down there. It's like right over
It's
there.
like,
yeah. It's like
I have my wife doing recon at her hospital today. She's working. I was like, tell me, like, cause like I got into Celsius when she was telling me like all these nurses were drinking and pounding Celsiuses. And I was like, okay. And then she's like, hey, all of them switched to Alani. So I was like, okay, time to sell.
I said they should have bought them. Dude.
Follow the nurses, dude. Follow the nurses.
No, you don't understand. I was pounding. I was like, Monster should buy Alani. Like Fabio can back me up on this. I was like,
You did.
This is the brand. Like I think it tastes better. It's founded by like an Instagram fitness influencer who's a female. Like everything about it scream like go in, and also, but like I think they're run really bad because they're not just energy drinks. They have like this shitty like protein segment that just sucks, and like this powder and everything. It's like you could, as Monster, go in there, buy it, strip all the crap out, and you'd have an awesome brand. But they bought back shares, so whatever, I guess.
How much do they think they could pay for Alani now? Because Alani's picking up.
When they want, dude, they wanted to
Every year they don't buy it.
They wanted to sell themselves for $1 billion a year and a half ago. And I was like, come on. I don't know what they'd pay for now.
Like I said, for me, I'm going to be looking at this exact chart for a while and just keeping my eye on the valuation of Celsius to see like, okay, are they gaining market share? Are they at least maintaining market share? And then seeing how, if they maintain market share, that means that they'll grow 15% year over year for the next however many years. Why? Because that's what the energy segment is growing at. They're catering at between 10 and 15%. So they'll grow with that. If they're gaining market share, which means that they'll probably double up on that, it'll be like 30% year over year, which compounds at a faster rate. And then you could just model it out that way, you know? Right now, you can see that they're gaining market share, which is good. It's just now you have to factor that into your model going into like the next 2-3 years and saying, okay, where does this thing end up? You know, but $100. My price target when I came into this year was about $100 a share. By the end of 2025, maybe early 2026, that has been pulled back to probably the 80s now, based on the trends that I'm seeing. So, you know, right now at $60, if that's enough return for you in terms of risk to reward, then whatever, buy it. But for me, it's not enough. It's not enough reward to take on. If it drops, what's your entry price look like if it drops below?
Very surface level. I had one for roughly about 40, 48, but I wouldn't really wait necessarily for that price.
I can't remember what I looked at. It's hard for me to say, like,
it's being aggressive.
We're assuming that nothing changes in the narrative or the story for them to drop to that point. At 40, what is that like a 30% drop?
Yeah, close. Yeah. I mean, no, it's like 20 because divided by 5 is 12. Every $12, that's $60. So it's about 20%.
Oh, because it's
yeah, from 60 to rounding it down to 60 to 48 would be 20% drop.
Oh, you said 48. I thought you said 40.
No.
Okay.
Well, you go to 40. Yeah, 30% drop.
Yeah. So you're looking at like a forward 40 multiple. It's a high free cash flow multiple, though. I might wait a little bit longer, but it depends on like what's happening.
Start dipping. Yeah.
So I don't know. I'd say maybe closer to like around 40, but we'd have to see.
I think. Well, I'm biased, but I do think Monster is interesting. Because I think the sell-off it kind of caught the call it the whole sector sickness, the flu, and then on top of that had that arbitrage trade close out and all those people getting out.
You see it just like dumped after that thing closed.
Yeah. Let me pull up the where did I put the oh, here. Yeah, so just to reiterate.
By the way, there's a certain person in our community who keeps on referring to this company as MSTR, and that is not this company.
Wait, who's saying MSTR?
Fuhat.
Oh, Fuhat, that's MicroStrategy.
He'll be like, MSTR. I'm like, dude, that's not Monster.
MicroStrategy. Yeah.
But yeah, so we'll see. When do they report next? I mean, it's got to be coming up probably July-ish.
A while. I think it's in August. I think it's very early August.
We'll see. Yeah, because they reported May 2nd. So yeah, probably August.
8/1/2024 is the estimate report date. So yeah.
Well, we know the estimate's always right.
Yep. The estimate of it. Yeah, you know. they'll report on the 27th of this month. I'm sure of it.
Mhm.
If you
100%.
guys
No.
if you guys want to take a look at a good consumer packaged goods play, for the next 2 to 3 years, believe it or not, look at Hershey's. I don't know if you've been
HSY.
checking that. HSY.
Yeah,
Yeah.
they've been pulling back. I saw them. So $182.
Now the thing is, it's all based on one thing. It's all
Cocoa?
based on cocoa prices. Let me just share something with you guys real quick. It's really interesting how the dynamics play out. But I mean, cocoa. Now, I've been tracking West African weather. I know this is gonna sound stupid. You're gonna laugh your ass off when I tell you my thesis on this one. You should never gamble based on or trade or invest based on weather patterns, but essentially right now you're actually starting to see something like that happen. So I'm sharing my screen if you want to show. So one of the things that we saw this year is cocoa prices have just absolutely exploded. A couple of reasons why. The last few years, because of some tree rot and also some weather issues in West Africa, which produces like 60 to 70% of the cocoa produced in the world, you started to see like shortfalls in the total amount of production. And what happened was this year, they were looking like earlier part of this year, they looked like they were going to have another bad year. So all these speculators kind of jumped in and started to just buy forward contracts and basically starting to speculate like crazy. Now, lo and behold, this year we got something called El Nino, and now we're transitioning to something called La Nina. And the thing is, during La Nina, you have a lot of weather. It's like a weather pattern that you have a lot more rain coming in West Africa. And usually it gives you this giant bumper crop that comes in. So a lot of these speculators, they're watching the weather, and every time like the weather gets a little bit better and the productions like looks like they're going to actually increase, they end up like going absolutely haywire. And so you can see right here, like Ghana, they just recently reported that they're actually going to rebound and have like a much higher production yield this year because of La Nina. And because of that, you're starting to see this pullback. The interesting thing is, if you look at Hershey, which, Hershey, majority of their, sorry, let me just go back to the thing, reload. Majority of their, me 1 second, sorry guys.
No, you're good.
Yeah, majority of their loss this year in terms of stock price has not been because of anything wrong fundamentally with their business. They're actually fundamentally very strong business, cash flow generating like crazy, buying back shares, issuing more dividends. But you can see that they basically went from about 260 now to like the 180s. And the thing is, you can see the chart where as cocoa prices started to go up and spike, you started to see the forward valuation of Hershey starting to come down. The thing is, though, Hershey's, it's not going to show up on their earnings statement right now because all these manufacturers, they all hedge. They buy out contracts years in advance to make sure that they have a reliable supply. So it's not impacting their earnings, but the perception that there's going to be a shortage of cacao beans next year is getting all these people to say, well, look, their cost of goods are going to go higher next year. And if this collapses, you can see this trading pattern right here where you see like the price of cacao. I mean, the price of Hershey's has come down. Cacao prices have gone up. But when cacao prices started to come down, you started to see Hershey's kind of like tick up as well. The funny thing is this week, both things happened where the price of cacao started to come down and Hershey still came down along with it. And I think this is a divergence in where the movement is going to happen in the stock. So I'm actually pretty long on Hershey's. I think they have a great business. It's up into the right business, consumer packaged goods. And if cacao prices come down, dude, Hershey's is going to go right back up.
So how much are they growing right now? Like without this being the issue, let's say this wasn't an issue.
Top line or bottom line?
Top line. Let's do top line and then we'll kind of go through market.
Yeah. So let's take a look real quick. Let me just pull up my other account roll. 1 second.
I just noticed on the camera, you see like where I've been wearing my watch. It's like that.
Share screen. Window. And this is the thing. Like I have multiple accounts, like one for my business. Um, and so like I log in with my business thing, but I'm logged in as like my own personal thing right now. So it's like 1 second.
For your
Share.
brokerage? Or
No. For my like subscription, I have like certain subscription sites that I use for
Okay.
investing. So it's just because otherwise it's all behind a paywall. So let's take a look at this. I was looking at Monster right before you guys start talking about, but this is Hershey's right now, and their revenue for the last however many years has just been absolutely gangbusters. They grow about 10 to 15% year over year. They've been able to capitalize on the increase in inflation by raising prices alongside everything else, but their cost of goods sold hasn't gone up nearly as much, So that's been a really big beneficiary. And they've also benefited from their hedging program, because essentially what they have is they had all these, they had all the supply that was bought with a futures contract, which meant that their cost of goods hasn't gone up with inflation. So this is where their profit margins kind of started to expand. So if you look at their EBITDA margin is around right now about 22%. This is their EBIT margin. Sorry, their EBITDA margin. It's about 26%. So it's been growing. They've also got some other parts of their business, but this, like I said, fundamentally, this is a strong business. Their cash flows are good. They have been recently coming down slightly, but if you look at it on a net income basis, they're look at this. It's the freaking beautiful
Up and to the
beautiful
right.
chart.
Yeah.
Up and to the right. But if you look at their stock chart is a little bit weird, where right now, because of all this cacao issues, they've actually pulled back since then. So they're trading right now at the same price they were in 2022-ish. But remember, this is like 3 years out of additional profits, additional share buybacks. And these guys do both. They've been growing their dividend like crazy. This is their dividend right now per share. So they've been growing their dividend almost like double digits recently. Let me just do trailing right here. So dividend growth is about 15-20%. Look at this. It's about $4.79 of just dividends right now, because they're just generating so much free cash flow. But on top of it, they have so much free cash flow that they're also buying back a ton of shares. Look at this. Share issuances. This is, like I said, this is a perfect consumer packaged goods business. They're very they're boring, but you know what? This is the kind of stuff you want to be in, man.
We were just talking about before you came on. I don't know if you were here for that segment. We were saying like, oh, these are some boring businesses that are interesting and have done well. So add this to the list, everyone.
Well, the only question with Hershey's I have is they've sold off a lot, but how much do you think that they were trading at too high of a multiple at the start of that sell-off?
Yeah, they were at 29, 27 forward multiple, the peak.
They've historically done, I don't know about forward. I have to look into that. I have to look at that. But in terms of PE, like normal, they're usually about 25. Right now, they're about 18 in terms of multiple. Okay. We could look historically. 1 second, HSY historic forward multiple.
Yeah, they're hitting actually, to your point. I have it pulled up here on SA, and it's basically at the low point.
Yeah.
Historically, yeah. Oh, yeah. Oh, wait, I have to enable my screen. Oh, there it is. So this is where we are now. You can see going back on the max chart, it's hit this, and this is current, not forward. So
what has it been on a forward basis? Does it show that?
I don't know if this one takes the forward. You have it on Ticker. Ticker does it. So Ticker's better than this on that.
I have it on Ticker.
It's funny. All three of us use different platforms to basically
I use 3. Let me see if this other one has it, but I'm not as familiar with this one.
So it's and the only thing I don't like, my biggest problem with Ticker is it normalizes earnings instead of doing GAAP. When you're talking about multiple.
Yeah.
But I have it here. I want to see going back to 2010. I can show you It hit this before in 2018. I'm not sure what happened then. I mean, obviously, it was a good investment from them
Okay,
forward.
let me pull up Hershey. Eventually, I'll be faster at using this one, but let me see. Forward valuation. There we go. Forward. Here we go. I might be faster than you. Haha, faster. Okay, so we want to max this out. It's already maxed out.
How are you liking that, by the way? FinChat.
Oh no, I like it. I like it a lot. I think it beats Ticker.
Yeah, but it's more
think-
expensive, right?
It
I
is more
tried-
expensive.
I tried using it, but the thing is, it just gives me too much information. You ever got like information overload?
It is. It is. And I frankly, I mean, I don't show it on live streams, but I have my own that I really rely on more. But I just have this one to pull it up publicly. And I also have Seeking Alpha because I love to see what retail thinks. So that's actually the most value add for me is like it lets me know what retail thinks because the comment sections are
No, that's
beautiful.
what StockTwits is for. What do you mean?
No, StockTwits doesn't have as much feed. Like there's not as much activity. So you have a very small select group of people that's like it's like the silliest of the silly.
Yeah, it really is.
So at least on Seeking Alpha, I can say that there's like more sophisticated retail. And then so you can kind of see what people are thinking. But yeah, so forward P going back. You see, unfortunately, why doesn't it go back further than this? So this is kind of meh. Because I would love to go back, going back the whole year, but I guess they don't have access to that data. Yeah, because I'm in the full time range. So okay, for the time range we have, it's on the low bound. It's on the low end.
Well,
So
how far
still,
back does this go?
it's only going back to 2014.
Is that because do you have to scroll to the left? Is that what it is?
No. This is the maximum bar that I'm allotted here.
It's probably limitations on their part because they don't want to pay a lot more for data storage, so they'll just do like 10 years. That's it,
They have more than 10 years for a bunch of other points, but just like, I guess this metric.
Well, from what I'm seeing, I go back to 2010. It's mostly just grinding its valuation up until 2014, and then you have that chart.
Is it similar conclusion? It's towards the lower end of its forward multiple?
Yeah. Mm-hmm.
Okay. So that's what we just want. We just want to know.
The only thing I don't know, because I talked to someone about this, because I was seeing the same thing. And like normally when you see a chart, especially in commodities like that, where it's like a rocket up, it usually comes back down.
The cure for high prices is what? It's high prices.
Yeah.
But the thing that I was wondering, because the one dynamic, so the difference between coca and oil is like I can go out tomorrow, I fire up an oil rig. I mean, not me, but like, there's enough oil. You can do it, pull it out pretty easily. Because there was like the problem with the cocoa trees rotting and everything. In my understanding, it takes like 3 years for a tree to actually start producing.
Well,
and so if you had that problem last year, like how sustained is this?
So here's what's going on. So depending on the weather, yields can materially go up and down, right? So not to mention also fertilizer. Last couple of years, fertilizer prices were just through the roof. So a lot of these farmers weren't really like fertilizing a lot of the trees and stuff around them. Because the thing is, when it comes to like cacao, the way that it works is that you need to have an ample amount of rain, and then based on that rain, you're going to have different pods come up. And the thing is, if it rains too much, what ends up happening is you get something called pod rot, where basically the pods are just too wet and basically allows for a lot of pathogens to come on, right? So you kind of need like this ideal condition that typically you will have, and that ideal condition will, generate more or less yields. Those ideal conditions in the past weren't met. This year looks like the ideal conditions are going to be around. The other problem that a lot of the things are happening is the speculation is actually way more than the supply and demand imbalance, right? So if right now people are saying, oh my God, I think, cacao, like the production is not going to be that high. You have all these people buying up futures contracts on this thing. So even if supply is not challenged, if you have rampant speculation in the futures contracts, then you have a problem. The other thing is the cocoa producers, the way that whole ecosystem works when it comes to production and then it ends up going to the market is the farmers have like a fixed contract that they are allowed to sell at, right? So they can't just go into the market and say, sell my cacaos at $12,000 a pound. I mean, or for a ton. They have to basically, set themselves up for production targets, and they get a fixed price, usually from the government, which sets them, right? The problem is they're smuggling the shit out of this stuff to outside of their normal areas where they can sell. And because they've been cacao smuggling out, the smugglers are holding a lot of this stock, hoping for a future that they can sell it for even higher prices. So imagine right now, you're a cacao grower in Ghana. You can sell to the government for $2,000, or you can go into the black market, smuggle your cacao pods to, another country, and they'll give you $6,000, right? The guy who now is consolidating all that cacao is going to hold on to that to get a maximum amount of return, where all these other buyers are going to be able to buy this thing at, 12,000. But the problem is this, and this is the thing that happens in farming. When the prices come up high like this, people start hoarding, but it also happens on the opposite end. When prices start to come down, these people, they put a whole swath of cacao beans onto the market at the same time. The cool thing is, if you want to pull up cacao prices for the last 20 years, right? They've been pretty stable, around $2,000 to $2,500 a pound. I mean, not pound, per ton for ever, because there's just not as much elasticity as people think. So I think majority of what's happening right now is all just speculation. I think demand is right there, and also there's geographical areas where they can actually expand production outside of just the West Africa area.
Because one of the things, I guess, because I don't know enough about the dynamics of this particular market, because every commodity is different. But it's a little, I guess it's slightly surprising to me, because I know with oil, and that's the commodity I probably know the best of any commodity, not that I know any of them particularly well. The futures contracts can't really move them. I don't think there's enough weight there to really move the market. Is that not is cacao or coca? I don't know the proper pronunciation. Is that slightly different, where the you think that futures buying and the future contracts purchases actually has the material ability to actually move the market like that?
Yeah. One, because oil is just it has a lot more liquidity than cacao does. And cacao has a concentration of production in West Africa. So there's a very set area where there's huge amounts of production. And so what happens is, if you can get to that specific area, then you can easily control the prices a lot more. The thing is, though, it's been a relatively stable market. So a lot of people didn't really consider hey, you know what? Cacao is worth speculating on. This year, you've got a lot of options, people getting in on this trade, and it's been pretty successful. Hedge funds especially. So.
Gotcha.
Yeah.
Not to be that what about stock guy, but the comment, I was already looking at this while we were talking about this, because Nestle doesn't benefit as much because it's a much larger business, and I don't really see how they can really pull growth levers, because we're talking about almost $300 billion company versus 30, so literally 10 times the size. Well, I think Hershey's is 40. Let me see, it's 36. Okay, 36. Let's call it 40. So not quite 10 times the size, but it's quite larger. Wouldn't you also think that something like Nestle follows this?
So I layered Nestle on top of it, but there's a lot less concentration risk in terms of cacao prices for Nestle, because they have just so many other products that are non-cacao based. The thing is, Hershey's has tried, and they're doing it somewhat successfully, to diversify their product lines. So right now, I don't know if do you have Skinny Pop? You ever had that?
No. Wait, Skinny Pop, the popcorn,
popcorn,
right? Yeah.
That's Hershey's. That's one of their fastest growing product segments. Have you had Dots pretzels?
No.
I'm sure if you saw it on the I mean, that's
I know a
thing
guy who eats them though.
Yeah, and it's really good. It's like so I think what happens is it's just this company is just trying to kind of diversify into like other segments. I think they also own Jolly Ranchers. I think
Pirates
they
booty.
also, Pirates
That I
Booty.
know.
Yeah. So
That-
these guys are doing what they're supposed to be doing in terms of getting more diversification, but it's not going to happen overnight. Still, majority of their cost of goods sold is going to be tied to cacao prices, whereas Nestle's a little bit on the opposite end of that, where they have a little bit more wiggle room in terms of like where they can generate more return. So,
Mhm.
yeah.
Yeah. Nestle is going to be more conglomeration.
Yeah.
They
But
got water,
the good thing with Hershey's is that cacao prices can't stay elevated like this for too long, because what ends up happening is it attracts too many people to the segment, and you'll have people converting. Like right now, all over Colombia, people are actually growing cacao. Like they're planting cacao trees because they're like, oh, look, we can probably get this in the future. I mean, I know that's like the stupidest way of doing things, but that's what people do. They look at the price, they're like, oh, I could get this much. Let me plant some cacao trees. So,
we should start planting cacao trees, honestly.
Nah, it's not a sustainable. It's just it requires too much labor. Like cacao, if you saw the amount of production input that you need to make this thing work, it's up there. First, you need to take these pods. You have to cut them down from the trees, and then after that, you have to break them open, and then you have to dry them, and then you have to take them up. It's
Simple.
a lot more complicated. Yeah,
We just have tons of kids, just old school. The little
Yeah.
farm. No, I'm joking. But okay, so yeah, interesting with boring business, commodities putting pressure on the sentiment at the very least. They're shielded from this through their futures contracts, their hedges. And yeah, I mean, I don't want, for the person who asked, I won't dismiss Nestle. You don't know this, but I'm going through like a boomer phase right now. Andrew knows this. Like I'm going through like a somewhat of a boomer phase, like capital preservation phase. Because this year we've been very lucky to have a very good year, but also getting to certain, I guess, desires of outcomes. But
Well,
this appeals to me. It's appealing. It's tugging on my boomer strings a little bit.
I feel like
Dude, I
you're
love
slightly
boomer
degenerate one.
stocks. Boomer stocks is the way to go right now, man. Trying to buy the Magnificent Seven at 30, like the highest PEs in a long time. That's not worth it, man. In terms of risk to reward, this is where we need to be looking. Like Verizon's another one. Like, who gives a shit about companies like that? Well, I do, because that's where the value is right now.
But it's always on the lower end of my portfolio, but I am allocating capital to it. But I bought companies like McDonald's, I picked up some McDonald's. I picked up Starbucks because there was the triple cross for the memes. If you don't know, Chris, the triple cross is like there's 3 stooges on YouTube that if they do something at a particular time, you just buy the stock regardless. It's up since then. They actually did the bottom.
Who are the 3 stooges?
I can't reveal it
can't.
publicly because the
Okay.
thing is we don't want to mess with it, because if they find out that they are what they are, it could affect the edge that it's providing.
Okay.
Just in case.
Interesting.
It's more of a
That's
joke. I'll tell you off
interesting.
camera.
Okay.
But yeah, okay. So interesting to put that on my radar, Hershey's, and I won't dismiss Nestle for June.
Do your own research, of course. I have to make sure I clarify. None of this is financial advice, of course. But, dude, can I ask you guys something? And
Go for it.
why do people invest in super unprofitable companies without any real future prospects? And they'll avoid the good shit and just be like, nah, you know what? I want that shitty company.
What company?
What company could you possibly be talking about?
There's so many. There's so many, dude. So many. The world of this is, I feel like there is a hedge fund out there, okay? Or some entity that's like, you know what? These people are getting too uppity. Throw them a meme stock, and just have them gamble away their life savings. That's what we want,
I mean, are you talking about a bank? Or are you talking about a different company?
I'm talking about a bunch of stuff, man.
There's a bunch of stuff.
You
there's
can't even. There's every category has a few of these companies that are just absolute shitbag companies, but people will buy them because they're like, that's the future, and I'm just like, really? You know,
We had a whole
just
segment about this. Your favorite stocks are dead money. It's not like our audience here, but YouTube as a broader platform, all the content creators, the top ones, it's like, yeah, they have a whole selection.
one of the things that I have noticed is that the more you come up with these weird and like wacky companies, the YouTube algorithm boosts you up higher.
Mhm.
You know, but then if you talk about something like, oh, if I say right now I'm bullish on Hershey's, I'll get laughed at because look at this guy buying fucking chocolate, right? But if you look at the chart on Hershey's going back to like 2010, it's actually like what 7x, you know? So I'll never understand that about people. It's just weird.
Yeah.
I think it comes down to excitement. Like in a lot of cases. Or I don't know if it's excitement. I think that also just becomes an echo chamber where one person comes up with a stock, they find a way to pitch it, even if it's not a good stock, in a way that's attractive. And then that starts to have other people, I don't want to say shill it, but like talk about it. And it just kind of creates a feedback loop of talking about it. Because like, I don't know, there's like 8 stocks on YouTube.
That's how it feels. Yeah.
It's like
There's 8 different stocks and they all talk about it. And then there's
Do
new
tell.
channels.
What are 8 stocks, please?
Oh,
Do tell.
I was pulling the number on my butt, but we can go through. I mean, you have Tesla,
PayPal, huge.
you have
Tesla.
PayPal, you have Palantir, you have SoFi. You'd have to say Nvidia too, right? At this
Technically
point,
now Nvidia's there too. Yeah.
What are the other ones that we? Oh, Alibaba.
That's
And
in the value investor side, of YouTube.
Yeah.
would you throw Tencent in there? Or do you think Tencent's not really?
No, Tencent's not
No.
talked about nearly enough.
Okay.
We were
Ginkgo
saying-
Bioworks, DNA for a little bit. I saw a lot of people putting his stuff on that. And then this other one, Clover.
Clover Health. Yeah.
Yeah, that was another one that I kept seeing.
Chamath SPAC or Chamath SPAC.
Yeah.
There's more. Depending on which way you go. I'm just trying to think.
I still remember 2 years ago, not 2 years ago, a year and a half ago. All I saw was thumbnails of Kathy Wood. Like people would just be like, Kathy Wood thinks this stock is gonna go 10x, and I think she's right. Or it was just literally all Kathy Wood. And none of them have worked out. None of them.
Oh, well, I failed to mention this one in the last live stream, even though I had it on the thumbnail because we just got into other topics.
Oh, UiPath.
What did they do?
So they do like
Robotic process
systemized.
automation,
Yeah.
Okay.
And so AI, you think AI, but Kathy Wood is just coping because she sold Nvidia, and Nvidia is the current representation of the AI boom. And she wants to cope and see, saying it's not, and other companies are the AI path. And she bought UiPath, and the story goes she bought it right before, and boop. She just doesn't miss. She doesn't miss. So, well, to be honest, like I don't know if they provide their actual research, but if they do, if what they have publicly available research is their research, it's actually really dog shit. But she gets a huge following. She's like pretty good at causing hype, and she's done this before. But
they do Monte Carlo simulations. Fabio, did you do that?
For someone who doesn't know what a Monte Carlo simulation, it might sound super impressive and make it sound superficial, and like there's no way this goes tits up. She got one lucky strike in Tesla, and the way her process doesn't work is because she only picked one. She threw darts at the board, and then one hit, and mostly everything else failed.
What?
And instead of leaning harder on her one win, which by the way, we could question whether or not it's like overvalued and is more closer to a short than anything.
Did she not have any other wins?
Well, she had Nvidia in her portfolio.
I mean, she has a lot of personal wins because she's been raking up those management fees. Like
she's-
how do you
Okay,
underperform so much and yet people still put money like billions with you?
Let me tell you this, Chris. She's
Yeah.
done this before back in the 2000. So she's like back, and people forgot that this isn't her first rodeo. Oh, remember, she also said that she started ARK Invest because God told her to.
I don't know if you want to listen to that, God. Maybe it's time to switch up. I'm Hindu, man. I got a bunch of gods if she needs to borrow one.
my two favorite like God in the stock market things are Kathy with that, and then Bill Hoying when he was like, God cares about fair value. I don't know if you've seen that.
Yeah, but at least God, Bill Hoying's gods were right. Like he had a good portfolio. I know a lot of people are giving him shit about it now. He was just over leveraged, but he had a pretty decent portfolio. He had like Google and Microsoft and profitable companies like Meta and stuff. It's just he got caught on the wrong side of leverage. That was his stupidity.
Portfolio management.
Yeah.
Like that's what I tell. So I know a few people right now, and they're just like going balls to the wall with like, oh, I'm gonna buy, Apple on margin, and I'm like, why? Don't do that. Like Apple's a good company, it makes money, but don't do it on margin because you don't know if this damn thing is just gonna collapse on you. And now all of a sudden you're gonna get a call. So it's such a I don't know.
She was right on Bitcoin as well, Kathy.
Not right enough, clearly. Wait, is it held in RK?
I don't think they can hold directly. So they have they have their own spot Bitcoin ETF. But
Okay.
They have Coinbase. That's like their proxy.
Okay. Well, I guess maybe she was right about Coinbase then. We'll give her that. But like the way you can tell again, the process doesn't work is
I don't know if she was. I think she
very few.
probably down on Coinbase because I'm betting you she bought right when it came out.
Are you guys seeing any opportunities in the market right now that other people are missing? Because I'm actually there's just not a lot of good opportunity right now. At least from my value and like I'm a value investor technically. There are times where I will delve into growth here and there, but is there anything that you guys are looking at that's worth like at least doing some research on?
I think there's
if you want to share publicly. If you want to share public. If you don't, that's fine too.
Yeah, thinking about the ones we can. Andrew, do you know of one maybe off the top?
Well, I said we already talked about Allison, which I think is really interesting at this price.
If you're going through value, yeah.
What else am I know we've talked about them. I'm just thinking of ones that we talk about publicly. I still think I don't know if I talk about that one publicly.
Wait, type it.
I'm just going to type the list here, and if you want to pick one, go.
Everyone's like MPW. No, Beater Stocks must really love medical
MPW.
properties. What is that? Medical Properties Trust?
Yeah. Oh, you know what? We can talk. Okay, so but this is like part of my boomer side of the portfolio where I'm kind of reaching really heavy into quality because I think there are these aren't going to maybe knock your socks off in terms of returns, but I think they're a good entry point at least for the longer term. But you have like John Deere is one that someone just mentioned. Mm-hmm. I think John Deere is at an interesting inflection, but the next couple years may end up being some sort of consolidation period, but the market for John Deere or the market, how it treats John Deere is always forward looking. So even though it looks bad in the current, it's always going to care about the next cycle. And then the next cycle is probably more in line around just at the tail end of 2025, 2026. So while it's going to look maybe more expensive in 2025, you could see it still rally because the market's looking 12 months ahead. If you look at it right now from valuation, it's actually trading at towards the bottom end of the valuation. And the thing about John Deere is they're increasing their install base constantly. And what people don't appreciate is, of course, how it's switching over to a much more of a service-based business than just selling, individual units. So just like Caterpillar
Oh.
in that sense, like the Caterpillar of the next 10 years after, because the problem with Caterpillar equipment is it's so good, it lasts so long. So people are still using equipment from like the 1990s, but the modern equipment has a lot of those sensors and detectors when they can kind of detect when something's wrong. So in the grand scheme of things, it should in theory save more money to their larger customers, but also drives more revenue or more sales for Caterpillar in that service-based business, which should drive earnings in the future. So
Interesting. Yeah.
there's going through these. I think, yeah, Sterling infrastructure is still really good. I've talked about that one publicly as one of my holdings.
I had that at one point. I sold it like an idiot, man. I really like that one. Yeah, I agree. I think it's a small cap, right? It's only like 3.3 billion, something like that. Yeah.
My opinion, not financial advice, anyone listen, but this is between me and Chris talking to you. I think that, you know, if you were to make the decision to buy more here, I don't think longer term you're going to look too silly, to say the least.
Yeah.
Because the infrastructure spend isn't slowing down anytime soon, and we actually might end ending that cycle. If we end that cycle, we're probably actually starting a new cycle in the classical data center capex. More data centers being built out. Yep.
We can talk about the most one of the community's favorite stocks that we can help pump for our frat boys. VKTX.
Viking Therapeutics. I agree. I actually like Viking. I like
All
them.
right.
Yeah. No, they're good, man. They're a sound competitor to Eli Lilly, man. I think their product. I'm surprised that someone hasn't come in and tried to buy them out. Their market cap's only about 6 billion right now.
Well, and I think that's like basically because the CEO has said they're looking or they're like willing to consider they want to get bought out, right?
Yeah, so VKTX, but just for full disclosure to everyone else, I like to start with the risk before we get into like what's good about it. It is a phase 1 drug. Okay, to clarify, phase 1, there's phase 1, 2, and 3, and we have people within the community who work in the drug testing space for a living, and they were not that impressed.
With what?
But they were not that impressed with the trial because it had very few participants, etc. And so, but if it works out, like this is going to I'm going to say it this way: if this is achieving what it claims to achieve, what the company claims that it could achieve, then this probably would be an insane return because it's an oral based GLP-1 drug. So very uninvasive. And if on top of that, at the dosages that they're claiming that, you know, it's very effective, I wouldn't be surprised if 1, it just gets bought out, or 2, they refuse to get bought out and you have an insane return here.
Yeah.
Like a blockbuster drug. So
yeah.
Definitely
something that worth speculating on. I mean, it's either you're gonna 10x 20x or you're gonna go broke, right? So there's a place in a portfolio for I have a place in my portfolio for these moonshot companies. You know, everyone should. I mean, because you never know.
Yeah, this is a moonshot.
What's the downside though? Because something happened in March. I don't know if it was earnings or if they had a trial pass.
0.
Okay.
It's all or nothing. These one and done biotech firms. Right now their main prospect is this GLP-1 oral drug.
And they're not getting any revenue off of that yet?
Of course not. No.
Because it hasn't been approved all the way through. You know?
Okay.
So if it doesn't go through, then it's going to be dead money. The best you got. So
my biggest losses have been in 2 sectors: energy and pharma.
Day trading mindset saying they're not a one-trick pony.
They are a one-trick pony. It doesn't matter what he says. They have a couple drugs, but they're if no one can convince me otherwise that if that drug doesn't go through, that this isn't going to be at the very least dead money for a while, and then you'll be that person who holds it and saying they're going to do it. You're the crying Wojak with the mask on. It's like they're not a one-trick pony. It's like no.
What's the runway they have before they have to do another raise?
What
is it? What's their run? It seems like they have a pretty large runway before they have to do a raise anytime. Yeah, they do.
Yeah.
I'm just saying like they have runway. Okay. But
And I think also we could
Value
talk about
investor got destroyed by YouTubers making videos after Googling a bunch of random shit.
I don't know what that's in reference to. But so Portugal scored. So I don't know. It's an interesting thesis because obviously like some of their stuff's going well. And if they get bought out, like you could see it pop to what, 80, 90 a share. What happens if they don't get bought out?
that's what I'm saying. They can't convince me otherwise. And the market is treating it like that. So the market's not here. This is either this works out or gets bought out. Then it doesn't matter if it works out or not. It's not your problem anymore. It's whoever buys its problem. But you're hoping for that. And if you want to get bought out, are you really have that much confidence in the drug at the end of the day? If I know that this is a blockbuster and I have enough runway for it, I don't want to sell.
Counter to that though is like it's one thing to do the research and like develop the drug, and then a whole other thing to get the distribution. Right.
If it works out and we get approval and it's as good as they say it is, many companies will come to you to partner for the distribution. They'll want a piece of that pie. That shouldn't be a problem. And that's probably pissing off a Koji right now. But
all right, guys, I gotta head out. Always fun talking to you. Take care.
Fun. Thanks for hopping on.
Have a good one. Yeah.
Oh, wait.
You pissed off Gil. I don't know why you pissed off Gil.
Who, me?
Yeah, I don't know.
You don't know what I said?
What did you say?
Because we talked about what stocks I can talk about, and he's like, "Oh, you're hiding stocks from us." And I said, "Yep, you better pay me your grift. You better pay my grift money to see all my stocks." So,
if it's either a value or if it's not a value, Gil, I don't know what to tell you.
I'm about done here. Unless we want to talk about a fun little company I found just for fun, since that.
Which one?
One? In the chat.
If it's a short one, we can't.
I don't have a position in it. I have
no. We shouldn't talk about that one yet.
Okay.
We shouldn't talk about that one yet, but that one we will talk about.
Yeah.
We gotta let that fester a little bit.
Okay.
There's gonna be some gems in that, 100%. Let's give it like 2 weeks. 2 weeks, and then
that works for me because I have to do more research on it anyways.
Oh yeah. So I think we can talk about Builder and GME, not GME. Bleh.
GMS.
Wow. GMS. GME. Whew. So. But yeah, BLDR, they're getting punished. $143.19. You have the decline in multifamily really hurt them, and now the debate is around.
What we should do is start with GMS because they just reported earnings Thursday and got crushed.
Yes. You know what? They could have been. I mean, this is the short bug. They could have been an interesting short because you've had Builders commentary. And then you had their earnings, and you could have.
But their exposure is different. I guess it's not that different, but they have more commercial exposure. So, and I have not looked at the. I have not looked at the report or anything. I glanced at it briefly. It looks like revenue went up, but they got crushed on margins. Let me just see here. But to summarize, I'm going to do something. I am going to buy at least one share of VKTX. I will hold this in support. It might just be one share, but okay. So Atcore, something infrastructure is Sterling. Interesting. I think I've heard of Atcore before. Maybe not. So let me look. I'm just looking at the GMS report. I'm just going to share my screen and we can kind of like in real time just look at what they said. Volume growth across all four major product categories drove record levels of full net year sales and strong cash flow. See, revenue was up, cash provided by operating activities was down, and they repurchased 174,000 common. Net income margin was 4%. This is what killed them. Net income margin was 4% compared to 5.8% last year. So the building's happening, but their margins are getting crushed. I don't know why. So I think that's a little different from Builder, isn't it?
No, Builder's margins are also coming down.
Oh, okay. So maybe it's the same.
Yeah, Builder's margins and net income are projected to come down even by sell-side estimates. They think 2024 is a lull period, then it's going to pick up again in 2025. That's current sell-side estimates.
Okay. And see, like GMS is saying, improving single-family end market should help offset declining multifamily and commercial.
There you go. So how much are they exposed to multifamily and commercial?
About 50?
50. Yeah, that's the weak side right now. The strength is in single family.
Right.
Single family can't get enough of it.
Isn't Builder mostly single family or no?
Yeah, it is. And then you see how they've been impacted. But the multiple difference between GMS and Builder was pretty stark. So Builder was getting close to the 20 and GMS was trading closer to 10. So in theory, if Builder is traded or priced more or was priced more for that success, that continued success, while GMS was, less was expected of it. So
I'm just saying, here's the gross profit increase primarily to the volume. Gross margin decreased 60 points. So they had a lot of increase in SG&A. Yeah, SG&A expenses percentage of net sales increased 80 basis points. Okay.
Could be maybe increase in competition, so they had to spend more in acquiring those customers.
Well, and then it says inclusive of 4.6% increase in interest expense, 17% increase in income tax expense. So I don't know. You'd have to like parse through the data, I feel like, to know what's going on. But it just shows multifamily and commercials where it's weak right now. Single family strong. I don't know how these guys' returns have been. Whoops, didn't mean to do it that way. So just pull up a chart. But, I think obviously Builder's been the better performer. Yeah, I think it has been a better performer. Although 300% over 5 years ain't bad. Let's see. Yeah, so Builder's done a lot better, obviously.
But they've also demolished their share count way more. And so I want to ding Builder real quick because I don't know when they did the bulk of their buybacks, but oh my gosh, if they did it, towards the highs, this is not looking too smart.
Right.
They've given up all the gains of this year. So now Builder is at the price it was at the very end of 2023. That's what
Don't
you're
you think
getting.
this is a potential opportunity?
I think so. Yeah. I had originally, I mean, you recall, those contracts were closed, but I probably still stand by that buy price of $140. That's where the contracts I had that I sold puts on Builder.
Yeah.
So
yeah, it's just, I don't know. I think these things could be getting interesting here. One of the things I think Dan was really big on was like, he thought that like there would be a sell-off in housing as an opportunity to get in. And I think he thought it'd be more like last year, but it's really happening this year. And I think he's got a solid point with that. Depending on how you feel about the housing market moving forward, it could be really interesting from here.
yeah.
I don't really have any position in any
I
housing
know
stocks.
we're not technical analysis guys, but it is hitting an interesting support level. So
Yeah, I think there's uses to it.
Right now, if you're trying to do financial psychology, etc., it's right now at an interesting support level. I think you could do worse. Honestly, it's a good business. Not the greatest business on the planet. I'm not saying that, but I think overall you could do way worse. It is a buyback machine. It's been serially underappreciated in the past, and so they've been able to buy back an ungodly amount of shares. So okay, thank you, Day Trading Mindset, for saying they were not buying around 200. Maybe
I always like the suggested. I like the, but I think Builder's potentially very interesting here. GMS could be as well. I mean, if you think about it, their market cap is what right now?
It's like 2 or 3 billion.
3.2 billion. There we go. Right, and their net income was. Where are you? Oh, cash from ops was 433 million. But where's net income? There we go.
And then Top Build is the one that I think hasn't even experienced this. Like, you could maybe make an argument that Top Build is due for a sell-off. Do we want to play that? No, I'm serious though.
You could go
speculative.
I don't know if they're similar. Long BLDR, short BLD.
I wouldn't short it. I'm saying like buy puts right before earnings.
Oh, I thought you were trying to say like, but I was saying like go net. I was saying like go net neutral and go long the one that's already sold off.
You could, but I'm trying to be degen.
Okay, if you want to be degen, buy some puts.
Sophisticated degen, being like, if the others did this, maybe this will do it too. That's
like really good analysis. I'll say it's like other ones sold off. This one will too. What could go wrong? I'm gonna put that in Wall Street Bets.
Hey, it probably would have worked. It worked out with GMS if you just did that brain dead analysis. You're just like, Builder sold off on their earnings.
Okay,
this one's going to sell off on its earnings.
I'll buy some 330 puts for December. We can go short. We'll go October.
I would go short. No. Put very little capital to this, just like $1,000 or $2,000, and then watch it turn into 10 grand. No, what are they trading for? What are the premiums going for?
They look pretty well. It's just a wide bid ask, so I don't know. It's like kind of not a lot of volume.
Well, let me see if my broker can give me something. So if I trade options,
and if you want, do you want this to be the last segment? By the way, I'm just
yeah.
My day. Okay.
Andrew's like, please release me. No, I'm kidding. I want to have a Saturday. No, me too. I gotta go see my girl. My girl.
I have to go watch my girls, which is my dogs. But
oh man. All right. Wait. When do they report? When does BLD report? July 30th. Oh, beautiful. That's how I like it. 1 month out. Let's go. All right, so let's go for the.
Yes, Akachi, by the way, Akachi's right. The technicals on Monster are very interesting.
Yes, very interesting. All right. Yeah, I'll pay an arm and a leg.
Portugal scored again? Dang. Who are they playing against? Turkey.
Oh, wait, never mind. I had the wrong thing set up. Never mind. No.
It's a good team.
Interesting. I mean, it's not that expensive.
Okay. It just, for me, it was showing like the bid at 0, the ask at 10, so it's like, who knows? In volume 0.
And right now it's 380. Yeah. If you know what? Yeah, it might even be worth it to. Okay, so yeah, it's assuming the middle range roughly. So I'm getting $6.90, the last price. But the thing is, you're definitely not going to get this one executed. There's no volume. There was no volume on Friday. So good luck.
So you're just betting that top build is going to be bottom build. And they're going
oh, that's very interesting. Yeah, dude, there's not even volume when you even get up to the current price. Like, that's terrible. All right, anyways, I have to check Monday. Maybe then you go even more DJ and you just short. But you're shorting a good business. So that's nervous. That's nerve-wracking. Yeah, that'd be very nerve-wracking. Because it could just as easily do well. Okay, so I think with that, we've talked about a lot of different businesses, a lot of different interesting opportunities. You know, it just is what it is that I'll be talking about some of the larger investments later than I do in the club. So
Right.
for Gil, if you're upset by that, I'm sorry. But yeah, and if you guys are curious, if you guys are new to the channel, please feel free to like. That lets me know you like the video, the live stream. Comment if you want to. Let me know your thoughts. Subscribe if you're not subscribed. And if you're curious about joining the Capital Mindset Club, the description, you'll see the link. Once you're locked into your existing price, you don't get increased. And we do 2 private live streams a week. One that's just me. Well, technically other people can join in, but it's community based, so a lot of people can talk. And then one is with me and the other analysts who provide their pitches, etc. You also get my portfolio updates. I'm doing better now because I'm told I'm very bad at advertising. You get my portfolio updates, dollar figures are included, brokerage, screenshots, and everything. So there's no facade there. And then, I mean, now you can kind of see how much of a boomer I've become too.
I don't know if you said you also, I mean, for whatever they're worth, you get to see bits of mine and the other analysts' ports as well.
Oh, yes. You get to see Andrew's portfolio. You get to see the other analyst's portfolio and any future analysts we bring on, their portfolios too. Their allocation, I don't require them to show dollar figures, but you see their percent allocation at the very least. And then you see the current main ideas of the club and the write-ups that are sourced by both myself, the analyst, and the club members. You also, and you get to write your own if you have interesting ideas and have other people collaborate with you. But yeah, that's the gist. So with that being said, I'll let you guys off and hope you guys enjoy your Saturday, your weekend. I hope, does this day work for you? We can do it earlier when do you wake up, Andrew?
During the week, I'm up at 5:30. I get up a little later on Saturdays. So, because I'm 2 hours behind you.
Yeah, I know. I'm trying to figure out if there's like a day that's consistent, so we can do a consistent
I
day.
could do. I think generally Saturday mornings are good for me. It just depends too. Like sometimes we're camping or we'll go and do stuff. That's the only thing. But unlike most Saturday mornings, it's good for me.
Okay, so maybe we got to figure out like one day a week that's like good for public content, because we do the private content, but the public content we can't. We have 186 people watching us right now, and then afterwards it's good views too. So we have an audience that wants to hear what we say.
And this is like a better time for like Europe, US. I guess it's really bad for Southeastern Asia viewers. But
it's impossible for me.
It's impossible, yeah. So
okay, we need to figure out one day a week that's like the better day, and then the time that's better. I actually like the mornings because nighttime now with everything, I'm kind of like, if I retire, maybe I'll have energy.
Right. No, I feel you, because like me, when we do night streams now, like I'm like crashing at like 9. I'm like,
yeah.
So
it's better in the mornings.
Yeah.
All right. Well, with that being said, guys, thank you guys so much for watching, and we'll be seeing you guys on the next one. I'll leave you guys with an outro.
Okay. We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.